Good morning. History in the making. The Dow plummets more than 777 points, its biggest one-day point drop in the 102-year history of the average. Bailout is in question now. The House rejecting a $700 billion rescue plan. Now, what's next?
We had a plan that we'd worked very hard on that did the job, gave us the tools we needed to protect the financial markets, to protect the American people. So where we go from here is something we're going to be working on with congressional leaders, because we need to get something done, and we're going to be working hard on it.
And the global markets are watching. Asian and European stocks down sharply out of the gate, though recovering off early lows. U.S. equity futures pointing to a bounce back at this point. A special extended edition of Squawk Box is back, is beginning again, really, right now.
Good morning once again to everybody. Welcome back to Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Carl Quintanilla. Vince Farrell is our guest host today. And by the way, if a picture is worth 1,000 words, then these charts we're going to look at, they are worth more than $1 trillion in losses. The Dow free falling by 7%. All 30 of the components were hit by declines. Also, the S&P 500 plummeting by almost 9%. The broader index shouldering its biggest one-day percentage drop since the 1987 market crash. By the way, all of the S&P sectors ended the day in the red. Red arrows just about everywhere you look. Almost no stock was safe. The small cap heavy Russell 2000, it fell by almost 7%. And by the way, the tech-heavy NASDAQ, it was hit for about 9%. Don't forget, folks, this is in a world where more than 800 stocks are protected from the short sellers, at least until a little later this week.
That's right, if that's not extended down the road.
Yeah.
Meantime, futures this morning, it's the end of the quarter. We're going to put the third quarter to bed today, last day of September, when we're going to get a mild bounce. We're going to get Case-Shiller numbers, Chicago PMI, but of course, the overriding theme will be whether or not the political will has been lost to put together some kind of rescue package on Capitol Hill. Markets around the world, Asia was down about 4% overnight to a 3-year low, down 483, although the Hang Seng came back in the middle of the session to close to the highs. Europe has been bounced all around, down 2% earlier, now up 14 points to 48.33. We'll keep a close eye on what that means for the opening bell here in the States. Oil, of course, completely collapsed yesterday, down $10, biggest dollar drop in about 17 years. Mild bounce today to up 143 to 97.80. 10-year note, the yield there is up about 10 basis points. A little more risk appetite this morning. Same story with the dollar, which is up against the yen as people begin to come out of their shells a little bit after yesterday's action. Finally, gold, which, as you know, is crept back and past the 105, 910 level in recent days, up 530 to 899.70.
All right, let's get right to the live trading action this morning. Rick Santelli standing by in the CME pits. Let's talk to you again, Rick. What if, the 3-month and the 1 month and the other things that we watch closely, Rick, it didn't even get as bad as it did on a week and a half ago on that Thursday, did it? Yeah?
No, it really didn't. As a matter of fact, 2-year swaps were out into the 160s on that particular day. And depending what T-bill or trading vendor you get quotes from, there was actually a dip into negative territory that day on one of the bills. So, yes, it was every bit as bad, maybe a little worse. The problem with yesterday is it started out so nice. We saw the paper from Wachovia, WAMU, their debt paper was doing much better. Morgan Stanley's paper was doing much better. Everything was starting to get traction. And once again, we all know what ultimately happened to the rescue plan. We don't know what will happen with it down the road. But today is a key day, and maybe tomorrow's even more a key day. Put a tombstone on the quarter. Tomorrow, let's see how the money flows again. These are always events in and of themselves, even during normal times.
We need to know whether things are stable because we can live without this plan, or whether they're stable because they just figure we're going to vote on it again and it's going to pass this time.
Well, I don't know the answer to that.
I know.
I
wish
personally.
Will you just tell me and just make one up so I can, put my hat on somewhere, hang my hat somewhere?
I think that something is going to be done. I don't know by whom or when, but I do think that the market, as Vince said, and he's been very excellent in this regard. We need a little help, but it still doesn't mean the pain is going to go away.
Because one big worry is that, everything passes and it worked yesterday and then things still freeze up. I mean, that at least is not happening. We didn't do it and then things went down.
On something.
Yeah. I mean, what if that happened, Rick? What if we did it and then we still went to 0 on the 1 month and the 3 month?
And you know what? That is every bit. That is a possible outcome. And I contend that even the government moving forward, we're not talking about the Washington, D.C. crowd. I'm talking about the Treasury specifically. Joe, if you had to summarize how Wall Street always goes astray, and we've said this a lot, it's borrowing short to lend long. Isn't that fundamentally flawed?
Yes.
Okay. Now, what have you noticed is going on with how the government, the U.S. Treasury, is going to fund some of these programs? You notice cash management bills, just as far as the eye can see, they're ramping those up. They're talking about a lot more aggressive bill auctions, note auctions. You see where I'm going with this, Joe?
Bad.
You know what? If our government wants to learn by all of the Lehmans and the Bear Stearns littered along the landscape, don't borrow short to lend long. They should be issuing 50-year bonds, perpetual bonds, 30-year bonds, because ultimately, when we do get through this, we could see the curve do really strange things in the areas that sovereigns are going to be pumping out the paper.
Yeah, the government would say we're not your typical investment bank. We're not beholden to covenants. I mean, we can do whatever we want. We can print as much money as we want, Rick.
And they can do all of that. I just think that it would behoove everybody involved not to take a chance on rolling over short-term paper 1, 2, 3 years down the road when you could see that we're not far above 4% on a 30-year bond. They should think long, go for the Hail Mary and issue this paper a long way down the road because these are historically low cost to do so.
Hey, Rick, it's Vince. If the government said, let's issue some 30-year paper, because like you say, it's close to 4%, how big a market exists right now for that?
Well, you know what, Vince? I don't think that we really know the answer to that after they took this away because we were going to see surpluses at Halloween of 2000. The market has come back a bit. But we've seen certain countries like France have good success with a 50-year. Perpetual bonds is something that Mr. Buffett had in his deal with Goldman. I think there will be huge demand. Who would have ever thought that you'd see an interest rate approaching 160 in a 2-year note for no other reason for the fact that they didn't have enough football helmets, and that was the best way investors could hunker down and feel safe. I think there'll be plenty of demand, Vince.
Rick, I think it's a brilliant idea, and you're exactly right. If you could lock in 30, 40, 50-year paper at very acceptable historical rates, you're putting the government in much better shape than the constant 30, I guess it's mostly 30-day bills they're selling, but they got to get away from that.
They absolutely do. And now's the time to think about it. Let's learn a lesson here. If you see something that doesn't look quite right, don't wait for everything to start seeping out of the cracks before you make a decision.
The old biotech and venture capital days where you raised capital when you could, because when you had to, you weren't able to. Now, with a 4% rate, you raise it when you can, and that locks it in.
Absolutely.
All right. Thanks, Rick.
Thank you.
Stick around. I know you got, big network type things that you were doing today, but this is the network of record for this story.
This is the network. Everything else is just elevator business music.
Bingo.
That's right.
Thank
Rick,
you.
we'll check back in with you in just a little bit. Right now, though, we want to go to the overseas markets. Maura Fogarty is standing by in Singapore. We're going to start things off, though, in London with Jeff Cutmore. He has the latest out of Europe. And, Jeff, looking a little brighter than it was at the very beginning of the day there, right?
Yeah, we've got neck-breaking volatility here, Becky. I have to tell you, we came out of the gates down about 146 points or so on the FTSE 100, Europe's biggest equity market by some margin. And then within about an hour or so, we turned that round completely. A lot of it has to do with the U.S. futures moving some 200 points to the better or so. But you know what? What we've got here in Europe right now is the sound of politicians finally waking up to what's happening here. We had the Irish government step in this morning and say they're going to guarantee savings and debts at the banks. We had another bailout here. Dexia's getting €6 billion to keep them safe. We also had Nicolas Sarkozy. He's running around now trying to get together European politicians to get some coordinated action going here to respond to this credit story here in Europe. And it's helping. It's really helping. We've got the banks just a little bit weaker right now. This is the Euro Stoxx Bank sub-index, and you can see we are still down here, but this is a hell of a long way away from where we were earlier on. So let me just say to you, it feels like the muscles are finally being flexed here in Europe, and someone's waking up to some of these problems. Maura, let me send it back to you in Singapore.
All right, thanks, Jeff. When Asia woke up this morning, they couldn't believe what they saw and that the vote hadn't actually passed, and panic really set across the markets today. We saw all the markets down very, very sharply at the open, but by the end of the session, some of that initial shock from the U.S. actually wore off. The Nikkei today finishing down 4%. It was down 5% at one point, but having pulled back and just lost 4% gave some optimism to investors out here. Don't forget, too, the Bank of Japan today poured in an extra 3 trillion yen into the money markets to calm financial markets. In the last 10 days alone, the BOJ has pumped in about 21 trillion yen. Japanese politicians also said they were going to put together their fiscal package and get that out and approved by Parliament as soon as they could. Over in Hong Kong, that market managed to turn around completely, closing 0.7% higher. By the end of the session, we saw defensive stocks like the utility sectors, as well as the telecom stocks like China Mobile, the world's biggest telco company by number of subscribers, closing higher today. Also, after the market closed, the Hong Kong Central Bank said it was implementing new measures to provide more liquidity to the local banking system. And finally, in Korea, we saw the market there trimming its losses, just down 0.6% today. Australia down 4%, not just the banking stocks that were hurt, but also the resources stocks that were hurt as we saw commodity prices pull back quite sharply. That was the Asian trading day. Can't wait to see how Wednesday shapes up. Back to you now, Carl.
All right, thank you very much, Maura. Meantime, congressional staffers telling CNBC no vote on a bailout plan is expected until at least Thursday. They say both sides are shocked and time is needed, in their words, to figure this out. President Bush, meantime, expected to speak today at 8:45 Eastern time this morning. John Harwood is our chief Washington correspondent. He joins us from the nation's capital this morning. John, we walked in here this morning and Joe and I asked ourselves, we said, has the political will for this thing gone away? I mean, it was only 12 votes, but are people beginning to think on the Hill that maybe we go some completely different route?
No, I don't think so. I talked to a member of the Democratic leadership last night who said their intention is to bring this bill back and have another vote late in the week. In fact, there's still optimism on the Democratic side that it's going to pass. But really, the problem is within the Republican caucus, you had 2/3 of the members of the president's party voting to take this thing down, despite the appeal of their leaders, despite the appeal of their president. And that's really what they're hoping for. You know, there are two ways they could go, Carl. One is to load this up as a Democratic bill and try to pass it on the Democratic side, put stimulus measures, other things favorable to the Democratic caucus. But Democrats don't want to do that, and the administration doesn't want to do it either. So the likeliest course is to try to take this bill, which went down by a narrow margin, tweak it ever so slightly to throw a bone to some members who've been resisting it on the Republican side, and see if there's some way the president and the leadership can get these votes. But the problem is within the House Republican caucus. Right. And one of the things that they're hoping for is that nearly 800-point
sure.
Drop in the Dow exerts some pressure on those members.
Well, although if we jump 200 points at the open today, that sends a mixed message to some.
Yeah.
Why would the Democrats... 95 Democrats voted against this. Why are they not the easiest votes to chase?
Well, because when you have a crisis like this, it's a bad vote for anybody. Nobody wants to vote for what is seen as many people by many people out there as $700 billion for Wall Street. You have a Republican administration in power asking for the vote. Democrats want partnership with the Republicans. They got it from their leaders. But their leaders couldn't make the followers. Democrats delivered 140 to, 60% of their caucus, and 2/3 of the Republicans voted against it. That's the problem.
Do you believe Boehner thought he had the votes when he made that speech?
I do think that they had a gut instinct that when it came down to casting the vote,
that enough guys would show up. It's very hard to know. You know, sometimes when they count these votes, sometimes they have actual commitments, and sometimes they have sort of commitments, and they assume that when the lights go up, when the pressure's on, the member is going to fall in line, and
John,
it just didn't happen.
John, why wouldn't Boehner make a statesman-like speech knowing he didn't have it, and why wouldn't Pelosi make that horrific partisan speech thinking that she did? And we keep talking about 12. We only missed 12. Add up the no's, John. It's 95 plus 130, isn't it?
Yep.
There are 220 or 230 that absolutely said no. And then I think you talk about tweaking it. You tweak it for the Democrats, you're going to lose more Republicans. You tweak it for the Republicans, you're going to lose Democrats. I don't know. The political will, John, and you say, you know, the White House has the power. The White House doesn't have power right now, obviously. And the political will, even some of us around this table are starting to think, hey, maybe FDIC, maybe this, maybe that. I mean,
well, certainly, Joe, if they try to do this again and they can't get it done, that's exactly what they're going to do.
But right now, we're just trying to, you know, the Wall Street hates uncertainty. And I just asked Rick Santelli, is the market and the credit market, is it holding up relatively well because we can survive without it? Or because we assume it's still going to happen? And
that's a great question.
We don't know at this point.
And to Carl's point earlier, if the market does go up on the open today, I would say the odds of getting a deal later in the week go down because the ability to pressure those members. The other thing that leadership is counting on here is pressure from business groups. You know, the U.S. Chamber was not happy with this. The realtors were not happy. The mortgage bankers were not happy with what happened. All of those organizations, Joe, have very robust access to Republican members of Congress.
So if the members are at home, if the members are at home, they're going to be talking to their constituents too. And what's the message that their constituents are trying to get through? I think a lot of people are still unhappy. We have emailers who are writing in again today. Somebody, John, who wrote in and said, okay, Wachovia went out of business. Yawn, wake me up when Ford or McDonald's or someone goes out of business.
Well, that's true. On the other hand, some of those same constituents back home also have 401k statements that come in the mail, and they may look at those statements and see what's going on.
Hey, John, it's Vince. Suppose you tried to tweak the bill to get some Democratic votes by putting in, say, a bankruptcy provision for the homeowner. How many Republicans does that lose? So if you were going to try to tweak it one side or the other, what would you do?
I think what you would try to do is tweak it in a more Republican direction, not a Democratic direction. Democrats clearly want partnership on this, and so try to figure out some ways. One of the things that the free market conservatives within the Republican caucus have been pushing for is some change in mark-to-market. There's language in the bill as it exists right now to call for a study of reforms of mark-to-market. I talked to one member of the Financial Services Committee last night, said one option is beef up that provision, see if that attracts a few more members. But it's hard to do anything with this insurance mechanism that the Republicans have been talking about because Treasury doesn't believe it's going to work.
Hey, John, last question. The polls seem to be going Obama's way on this, 50, 42, whatever it is.
Strongly.
The Gallup. But is there any chance that because we know what Main Street thinks about this, is there any way that the House Republicans end up not looking like the villains here and actually, you know, if it's not the end of the world, that maybe the other thing happens and it doesn't benefit the Democrats?
Well,
I mean, if it's 100, if they're getting 100,
depends on whether it's the end of the world or not.
Yeah, right.
Well, we better find out in the next 30 days.
But if the calls are 100 to 1 against, it seems like you're pandering to the constituents at that point, and you might be getting votes.
Is it pandering or doing what your constituents want?
Doing what your constituents want you to do.
Joe, a couple points about that. First of all, yes, the calls and the letters and the emails are heavily against. That's not a reflection of public opinion. That's a reflection of the most vocal aspects of public opinion.
Like
you
the
look at
people
these
that write in
polls.
here,
There's a lot more uncertainty. There's a lot more. I don't understand this. You know, we had in our Journal NBC poll last week a third. Yes, no, don't know.
Yeah.
It is not clear how that's going to play out. But if you have minimal consequences, all those no votes look a lot better. And the fallout is a lot lighter. On the other hand, if the credit markets, in fact, seize up, it really goes to the question of whether or not voters conclude and politicians conclude that Hank Paulson was playing Chicken Little. But if they conclude that he was correct about that, and I think most members of the leadership are inclined to believe he is correct, then you could have some significant political
I want
consequences.
to know who voted on every single one of these. I want the names of
I mean, it's
everybody.
no coincidence that this is an issue for the House, where they are perpetually
Right.
campaigning.
The Senate is
Senate
quite
is
different.
they got 6 years.
Yeah.
They're not faced with
Boy.
these.
There's only 100 versus the 435.
Right.
I mean,
The thing we're getting now is that the ire about the condescending notion that the only reason you're not supporting this is because you don't get it.
and that's a fair
That
point.
is-
That's a fair point.
that is
That's-
going off the charts. People
Can
say,
you
It is
explain
elitist.
commercial
Joe?
paper and
Yeah,
LIBOR
John.
to people?
No.
I mean,
no, but then again, people maybe aren't that. Go ahead, John.
There are two aspects to the opposition, okay? And don't believe any of that stuff about Nancy Pelosi's speech. No, but none of those Republicans care what
Maybe
Nancy
not.
Pelosi
Still a
says.
despicable speech, but go ahead. I know
Right.
you loved it. You were like,
Nancy
pom poms out. But go ahead.
Look, nobody pays attention to those floor speeches and is influenced by them. They vote based on what they think is good for them and
I'm
what
sure, yeah.
jives with
Yeah.
their beliefs.
And
There
whether
are
they
two
get
reasons that
two-year
people vote
electing
against
cycle.
it.
Yeah.
One is if people are fearful for their careers, and that's why all of the people, nearly all of them, in competitive races voted no, because that's the safer thing, because your opponent could attack you for voting yes. The second thing is your own beliefs and your own conscience about what you think is right for the country. And there are a lot of members on the Republican side who believe that this is creeping socialism and who are against it for that reason. Now, you can admire that for ideological commitment or you can condemn it as zealotry, but that's what it is.
Right. I agree.
All right, John, thank you very much.
bet.
We will check back in with you again soon. Meantime, though, at home, if you have any more comments, any questions about anything you see here on Squawk, go ahead and email us. I know there's some difficult questions. We can't answer everything you're sending in, but
If you need us to explain this bill so that you'll support it, we'll be glad to do that because obviously you don't really
oh,
understand.
stop. He's being
He doesn't mean
facetious.
it.
He doesn't mean that. Go ahead and
Because
email
you'd be
us.
for it if you understood it. You must really not.
Oh,
But
boy.
we'll try to help you, bring you along slowly because
He's being
Sarcasm.
facetious. Sarcasm if you don't know Joe well. Anyway, it's squawk@cnbc.com, and you can send all of those directly to Joe. We'll make sure we take care of it. This is a special extended edition of Squawk Box. We will be right back. Stay right here.
In these critical times, turn to CNBC.com. All week, CNBC.com will feature live streams of CNBC Asia and Europe beginning at 6 p.m. Eastern.
You're about to leave the world you know behind.
You work with monsters. By the way, if there's a cleanup on aisle 2, I don't want to know about it.
Some hide,
Come down and we talk about this.
they seek.
I think I'm handling the whole world turned upside down thing pretty well.
Welcome to the sanctuary.
A sci-fi original series, Sanctuary, 2-hour premiere Friday at 9.
Today, turbulent markets, tumultuous trades. Is your nest egg scrambled or fried? Get the smart moves you need for fast money. CNBC 5 Eastern.
All right, welcome back to Squawk Box, everyone. It's time to bring a few new voices into the table. Vince Farrell, who's been with us this morning, is still here. He's going to be talking about this, but we're joined right now by Phil Orlando. He's the chief equity market strategist at Federated Investors. Also, Andy Bush from BMO Capital. Also, Bob Brusca, he's the chief economist at Fact and Opinion Economics. And Phil, I want to start things off with you. We were talking about this a little bit this morning. You were expecting that this bill would pass.
We
correct?
absolutely were. And I put that on Speaker Pelosi, that if you're a lawyer in court, you don't ask a question that you don't have the answer to. It's inconceivable to me that she would have called that vote not knowing that she had the vote. And I think that's where we have to start the legislative process.
Okay, what do you mean start the legislative process? Is this kind of a do-over on the same sort of legislation, or do you want to go back to the drawing board?
Well, I think we take advantage of the 2-day Rosh Hashanah holiday here. We figure out, okay, where are the sticking points? What tweaks do we need to make? And then we come back on Thursday or Friday and try to vote this again. I don't think we need to completely blow the thing up and start from scratch. We're only 12 votes short. So I think with a couple of tweaks, we may be able to get this done.
We were just talking about that. Where do you tweak it, and by tweaking it, do you risk losing some of the votes one side or the other if you start out?
Don't know the answer to that because I don't know where the sticking points are. Now, clearly the Republicans got spooked. You had many more Republicans not voting for this from the Democrats. So we've got to find out exactly where were the problems here. Now, the downside is that if this thing doesn't pass, we've got a recession call in place. This recession call then becomes longer and deeper. And there's an economic cataclysm that we've got to deal with. So Congress has to understand the realities of what we're dealing with in the economy and the marketplace here, come back to work and make this thing work and get it passed.
Andy, what do you think?
Well, I'm certainly disappointed with the vote. You know what's interesting is that when they did the whip count at noon, they knew that this thing was really tight. So My question is why would Nancy Pelosi and Boehner bring this thing to the floor if they weren't going to get the 100 votes from the Republican caucus? I mean, that was kind of the key. That was the key bogey that they needed to get to.
That's
like I said,
story almost. What happens now?
I know, but that leads into why didn't 100 Republicans vote for it? Because that's the bogey you're going to get to. You can't just switch 12. You got to get the whole caucus to get behind this. So that's the question. What can you offer the Republicans to get them back to the negotiating table and get those 100 votes? So it's got to run a little deeper. Certainly the insurance program is a non-starter to some extent. I'm not sure what they're going to come up with, but I am sure they're going to bring this back up for a vote by the end of the week.
Bob, do you agree with Phil that there's a recession on hand? This could make things worse, make it longer and deeper if we don't get some action passed?
Oh, unequivocally. The signs are there. We're waiting for the employment report this week. Last month, remember, the unemployment rate rose from 5.7 to 6.1%, a very sharp spike. And since then, we've had consistent drops in things like retail sales. We saw PCE going down. We've got consumption declining at a 2.7% annual rate in Q3, and that's about 70% of GDP. Pretty hard to get a positive GDP number out of that, and things are sliding. So this is not the time that you want to be cutting the umbilical cord for your banks and saying bye-bye. So, I think there's a lot of work to do. Clearly, we know the Republicans like this insurance policy. I don't know if the Democrats are that opposed to it, but it looks to me like this is all about politics and the elections. And so don't talk to an economist about it. This is political science territory and, horse trading and who thinks they can get elected. Pelosi said that you can't do the normal horse trading because you can't trade votes with people who, if they vote the wrong way, won't be there next year. So that's kind of a stark reality.
That's a fair point. But, Vince, where do we stand with the markets between now and then? If this takes, let's say, a week, 2 weeks, 3 weeks before you get something in place, what do you expect to see happening in the meantime?
I think what you do, Joe and I were talking off camera, is get back up in the balcony, Becky, for a second and try and imagine the recession scenario, which I agree with Phil, plays out. What do the earnings go to? And I think the S&P earnings at the peak were around $90. I don't think that's off by too much. And usually when you see a bad economic scenario, you might have as big a decline as much as 20%. It stops somewhat short of that. So then you come up with earnings of about, say, between $70 and $75 on the S&P. What multiple do you put on trough earnings? With very low interest rates, you could argue that it ought to be 10 times. I argue that it ought to be higher, maybe 13 times. So what you get is that you're at a valuation right now that implies a bottom. Now, typically when you get hysteria, you go through that. But it's got all the earmarks to me of a panic bottom, and I think you have to try to say something, whether it's a bill or no bill, something will happen and the republic will survive. You can't plan for the end of the world. So let's plan for bad earnings and let's plan for normal valuations of bad earnings, and I think you come up with a valuation that's kind of in the area of where we are now.
What if you're wrong on the 20%, Vince? What if it's 40%?
Yeah, well, then you got a real problem, Joe.
Well, if we're talking about much deeper and longer than people think because of what's happening, 20 doesn't sound like. I mean, these were peak earnings we were talking about that we went through, and then you're not, you're probably leaving in all these extraordinary or taking out extraordinary items too. If you leave those in, all these write-downs, it becomes even worse.
Well, I think you won't have write-downs. The banks, I'm assuming, will not have write-downs in the future. But if it's 40,
then you'd say we're not at the bottom.
No, absolutely not. I don't think it's 40 because I've been through severe and deep recessions before. And I think we have the potential for a severe and deep recession.
But you were born in like 1945 or something, right? Or 1950.
Yeah, but my experience of the market really dates from the late 60s. Well, from the late 60s on, and a little bit of a student of the market.
That wasn't anything like the 30s, though.
If you think we have the 1930s coming up, Joe, then be glad you're on that side of the table and not on my side of the table.
I don't know where.
You know what? Hey, Joe. Yeah. Joe, can I just add that, with this non-passage of the bill, they can strip out parts of it and vote on it separately. One of the things I hope that they do is looking at the Federal Reserve being able to pay interest rates on their reserves. Now, that'll help because then the Fed can expand their balance sheet even more aggressively to kind of get through some of this credit crunch that we've been experiencing, and it won't drive Fed funds to zero. So that's kind of an important thing that you may see parts of that bill get stripped out and voted on separately. That would be a way forward to maybe getting around the whole TARP plan. And then, like Vince said, the valuations kick in and things look pretty good. So today's going to be an interesting day. If we can stabilize in here and regain about half of this loss, that would be a big positive.
Well, already you're looking at the futures up by about 250 points for the Dow futures. What do you do to change your strategy, Phil?
Well, the VIX, we had a record number last night. Right. So certainly I think we're going to get a snapback here. And we agree with Vince's valuation analysis. We're looking at sort of a 12 or 13 trough multiple. We're prepared to chop 15 or 20% off of expected earnings and come up with sort of a worst case scenario. In order for us to get more constructive on the market, we need to see this thing pass. But even if this passes, it does nothing for what we think is a punk second half in terms of GDP. This 2.8% second quarter number, that's going to be the high water mark for the next year. We think that third and fourth quarter GDP here is going to be no better than marginally positive. First half of next year, maybe a little better. Our view is that we're looking at a second half of 09 recovery based upon the rate cuts that the Fed has already made and the passage of this bill here. And if this bill doesn't pass, then that second half of 09 recovery is in doubt, and that's why we're looking to extend our recession call.
All right, Phil, Bob, Andy, gentlemen, thank you very much. Vince is staying right here, and we'll be back in just a moment.
Becky mentioned futures here looking pretty good. Let's get overseas this morning. In London, Jeff Cutmore has the latest out of Europe, where you guys are putting up a pretty good fight this morning, Jeff.
Hey, we're trying to pull it back round, Carl. You know what? Let's just have a look at the board. And there's something very interesting going on. This is not about the economics. It's about the politics. Look at the divergence between the three markets, London, Paris, Germany. We've seen the clearest and strongest intervention by the authorities in Paris and in London. It's probably explaining why the German market looks the weakest at this point, where we're off about 1%. But you know what? We've come back a long way since we started the trade. We've turned around about 146-point loss earlier in the session on the UK market. So we are flatlining here in Europe. Carl, back to you.
Thank you very much, Jeff Cutmore in London. When we come back, central banks around the world scrambling to relieve the market strain, more than doubling the amount of dollar funding. Why isn't that working? Are coordinated interest rate cuts the next answer? The word from some traders when the Squawk Box continues.
I'm Guy Adami, and this is your Fast Money Trade School. It's time to focus on the float. What is it? A stock's float is simply the total number of shares available for trading. And a company with a small float is like a double-edged sword. Just a little bit of good news can send shares soaring, but bad news can send it heading lower in a hurry. So keep your eye on the float, or you could find yourself sinking fast. Class dismissed.
When we come back, an historic sell-off on Wall Street and the morning after reaction with the futures up about 200 points. We'll go to the futures pits and check in with our trusted friend, Kevin Ferry, when Squawk Box continues on this Tuesday morning.
Okay, there are very few stocks that are working right now. One that actually does well in the event that a big plan that would have helped America failed, and that's called Lending Processing Service, LPS. That one will be going down with every other stock, but I think that is a good place to look at. The bailout fallout is severe. We've had, I think, maybe 1/4 of what we could still go down. And so buy gingerly on the way down. Please don't be aggressive. We're not done yet.
Welcome back. Let's get to the trading pits in Chicago. Rick Santelli and Kevin Ferry of Cronus Futures Management joining us from the Windy City. Guys, good morning. Kevin, I guess the thing we're wondering the most at the table this morning is, are futures up because they think we're going to get a new vote after Thursday, or maybe we've just wiped our hands of this whole idea to begin with?
Yeah, probably a little bit of each, Carl. I think the one point I would add about equity is that it was exacerbated by the fact that some people felt as soon as they started voting, brought buying into the market for a quick day trade because they thought it was going to pass. And second of all, there was a lot of hedge fund people in the market that were kind of waiting for a pass so they could sell because they've got a lot of redemptions. When neither thing happened, you had twice as much selling going on as would have happened in a normal. So the market does rebound back up, but I don't think it's necessarily a good thing. You have to watch from a trading standpoint. You have to watch markets that rise overnight and give people that are trapped a bid to hit. So we would have actually rather seen the market stay depressed into the morning session and then build on something better. So watch for a back and fill. That being said, it's not about equity. I can't say it enough times. It's about debt. It's about funding and liquidity. So until we can turn people's head the other way and look at something a little bit more complex, we're going to get everything we deserve on this. So,
Rick, maybe we need to create like the Dow Jones asset-backed commercial paper index, and that will be on nightly news, and that'll be on the cover of the New York Post.
Well, absolutely. And, you know, we're lucky to have Kevin Ferry. You heard Andy Bush. I think what we need to talk about is enough haircuts for our own banking reserves. Yuck. And Kevin Ferry has been talking about this. Andy Bush has been talking about it. It doesn't need to be part of a big plan. Kevin, tell the viewers why they need to do this and why they need to do it now.
Right. Well, I think that's the key. And interest on reserves, if you look at, even though LIBOR and a lot of the funding measures worsened in the spot market from Sunday night to Monday morning fixes, the futures market improved unbelievably, as much as 50 basis points to the good if you looked out into the future strip. That was because both interest on reserves and the concept that it's a funding issue. There isn't really a strong structural demoralization of the United States banking industry. So if you can fund it, you can get through this. And so I think that's what they should key on. And I think the loss of the ability, as soon as October 1st came around, Bernanke's ability to pay interest on reserves was something that the futures market was looking better for. So you had a market difference between spot rates and forward rates yesterday. 12 to the worse in spot, as much as 50 basis points to the good in futures. By the end of the day, we can't hold that elephant up when the rest of the world's going the other way.
Right. Rick, everybody's looking at Joe's hair after you held that up.
It's still here. Was that the Wolfman's? Whose was that?
You know, it was sitting on the Wolfman's chair, and we thought that mane had something to do with, you know, lunar cycles. You know, we're going to have to talk to that guy when he gets down here later.
That was my just cut. I have 3 or 4 of them so that it looks, you know, I actually pretend that
Try different lengths.
This is the fresh cut. This is the medium. Yeah, exactly. Send that back to me.
I will. You know, I have some old convertibles. Sometimes you want a white top, sometimes you want a brown top, you know.
Guys, good to see you both. Talk to you later. Kevin and Rick.
All right, good morning.
All right, comments, questions about anything you see here on Squawk. We don't need to ask you anymore because you are giving them to us. Email us at squawk@cnbc.com. A quick break now. When we return, Congressman Chris Shays speaks out on the bailout bill failure. Got a lot of interesting things to ask him there. It's real, I'm telling you, and you're jealous. And what we can expect next, don't go away.
Shot from the back?
Yeah. You're jealous.
Tonight, America's automakers in crisis.
There's 1 million people counting on Chrysler being successful. Failure is not an option.
Can Robert Nardelli steer Chrysler in the right direction? Plus, Iron Man director Jon Favreau and producer Stephen Bochco on the next Conversations with Michael Eisner, CNBC Tonight. They took their idea from obscurity to nationwide sensation. Ordinary people doing extraordinary things.
Give me a sign. I'm either supposed to do this or I'm not.
Making a business venture a business adventure.
If the next guy can do it, I can do it, and I can do it better.
Donnie Deutsch hosts The Entrepreneurs. Premieres tomorrow, CNBC 10 Eastern.
All right, Congress going back to square one this morning after the shocking defeat of the bailout plan. Congressman Chris Shays is a member of the Financial Services Committee, and we're glad to have you, Congressman, especially this morning, because we've been kicking things around, and we're wondering whether, if you don't do it the first time, does the opposition get stronger, or are you able to convert 12, or is it now going to be 30?
Well, I think 2 things happen. Either the bill is reintroduced just as it is, and they have the 15 votes, give or take, that they need, or they make a slight adjustment. There were, I voted for this legislation. I had problems with not dealing with federal deposits at banks, insurance. I think it 100,000 since 1980. It should be up much higher. I wondered if $700 billion would actually be enough. I don't have a question. I think we're going to get our money back. and some. So that wasn't my problem. And then there were others who were concerned about not thinking of this as a liquidity issue, but as a capital markets issue. And what we did in the 80s to deal with the savings and loan crisis was to basically help banks with their capital.
Well, you tweak it so that it's more palatable to you, and then you lose some Democrats. You tweak it. If you tweak it to try and get the Democrats, you're going to lose more guys on the House.
Well, let me be clear. I voted for the bill. I mean, I didn't feel like playing Russian roulette. I mean, this isn't 1929, but, you know, this isn't a great environment.
2/3 of your colleagues felt like playing Russian roulette.
Well, you know, they did. And I think some of them may be a little uneasy with $1 trillion disappearance in the market yesterday.
Right, it's coming back today, though. And, you know, the longer it goes where, you know, if the credit markets, if things don't seize up, we're trying to figure out, Congressman, whether the market, it was bad yesterday, but, you know, on a percentage basis, it wasn't the end of the world. We're trying to figure out whether the market is anticipating it finally gets done, or whether the market has already moved on and says we can do it without it and do something with the FDIC.
You know, one of the things is that we had this plan yesterday, and the market started to go down. And so some of my colleagues were saying, well, you know, they don't seem to be too impressed with the package.
Well, there's maybe some truth to that. I can tell you, you know what you're hearing in your office when you answer the phone. We're hearing the same thing here, Congressman. So you wonder whether these guys are just doing the will of the people, the ones that said no.
Well, 30-1 in my office, and I represent a pretty focused financial district. I had one member in Texas say he had 1,000 calls and only 2 people supported it.
So how do you answer those constituents? How do you explain your vote? How will you explain your vote?
Well, what I say is this isn't about Wall Street, it's about Main Street. It's about
and you expect them to listen to that?
Well, you know what? That's a good point. I do expect them to listen. But you know, you live with the consequences. The bottom line for me is I try to educate. Part of my job is to listen, to learn, to help, and to lead. And this is the leadership part of the job that I have.
Congressman, if you think that things are so dire, and it sounds like a lot of people in the leadership positions do believe that this is a very dire situation, why take 2 days and think this through?
Yeah.
Is that a cooling off period? Or if things are so dire, why aren't we acting before Thursday?
Well, I think part of it, frankly, is the Jewish holiday. And I'm in Washington. I think we need to be here. I think it's a mistake. I think what they should have said is we are not leaving this place until we get the job done, holiday or not.
And that's just not something that's shared by the rest of the Congress, is that?
Well, you know, it should be. I mean, you know, the good news was this was not a partisan debate when we started. There were debates within the Republican Party and within the Democratic Party, but we weren't taking shots at each other. Yesterday had a different feel. You know, Nancy Pelosi starting to make this somewhat of a partisan issue. I'm not saying that we lost it because of her, but the members who voted against this bill were not inclined to change their vote after listening to what Nancy said.
Yeah, and you may be in a position, I don't know how competitive your race is, Congressman, but obviously those who are in tight races, they can't afford to be as trusting with their constituents that they'll understand, right?
Well, my race is called a toss-up, not a lean Republican, so.
Obama has a note out this morning saying that he's going to call on Congress to or a call on the government to raise the FDIC limit from 100K to 250. Well, is that significant?
My bill, I tried to get an amendment to this package on the night before last to raise it to 300,000. It's 100,000 for most Americans, 250,000 now for retirement funds. And we wanted to bring it all up to 300,000. The problem I have is that 40% of what's in banks are not insured, and they tend to be businessmen and women who have to, you know, make transactions. Roscoe Bartlett has one that has no limit. It should be raised.
Would that move the ball down the field on this bill?
I think it would be very helpful.
All right. The bottom line: whose concerns do we address to get it to pass, Congressman? Do we try to get more Democrats on board, because there were plenty of them we didn't get, or try to get some more Republicans on? Who's going to be easier to sway to get it done?
Well, you know, when we Republicans were running the place, we always tried to make sure that we could get a bill passed without one Democrat. I'm not saying I always agree with that policy, but for 95 Democrats to vote no is pretty significant and I think very serious. Now,
well, then you're going to have union guys sitting on the board of all these companies then that are
well, you know, that's a
bailed
good
out.
point. If the Democrats came back to us and said, if we can't do it with your votes, we can do it with our votes, but we're going to do the following, then that would be a real serious mistake. So I hope we're able to put it together. I think we will. If I were a betting man, which I'm not, I would say we'll get it done by Thursday or Friday.
If there's not some resolution from the House, from the Congress, do you think that this can be done piecemeal with the tools that Treasury and Fed already have?
And that's the point. You know, they may be able to bring this package right back together again, just as it is, by having the SEC deal with the mark-to-market issue. If we had had that in the 80s, we never would have been able to solve the financial crisis we had then. So we've made our job a lot more difficult just with that one provision.
All right, Congressman, thank you very much for joining us today. Again, Congressman Shays. And by the way, folks, President Bush is expected to speak at 8:45 Eastern this morning. We will bring that to you live. Stay right here.
Futures pointing to a bounce this morning, and coming up, BlackRock's Bob Dahl on the bailout, the economy, the state of the markets, and what he's buying and selling right now.
In these critical times, turn to CNBC.com. All week, CNBC.com will feature live streams of CNBC Asia and Europe beginning at 6 p.m. Eastern.
Good morning. The House of Representatives defeating a financial rescue package, the Dow dropping 7%.
I think people need to settle in, recognize what happened today, not just the vote that happened today, but how the markets reacted to today and what could happen tomorrow and the succeeding days.
Well, called higher so far today, but we'll see. Treasury Secretary Hank Paulson vowing to continue his fight to try to save both Wall Street and Main Street.
We need to put something back together that works. And as you've heard me say, we believe that our plan and the plan that we developed with the congressional leaders and worked so hard is a plan that works.
Futures this morning rebounding from the sharp sell-off that we saw yesterday, indicating about 260 points up. It was the worst sell-off the markets have seen since they reopened after the terrorist attacks back on September 11th, 2001. What is next for Wall Street? What's next for Main Street? Is your money safe? We'll try to get the answers to these and other questions in this 7 o'clock now hour, I think, of Squawk Box.
So what is the street saying about why the bailout bill failed? Our Charlie Gasparino joins us here. Good morning on Squawk Box, 7 a.m. Eastern. Charlie, we watched it all happen yesterday, and the question now is whether or not they try to fix this or move on to something completely different.
You really get the impression that we're looking into the abyss right now. I mean, it's kind of a scary situation. Listen, I spent a lot of time yesterday talking to people both in Washington and Wall Street. And it's really interesting how little Wall Street understands about Washington and how it works and what are some of the players, what are the dynamics here. I mean, listen, there's lots of blame to go around. Number one, it's the Republicans in the House. I mean, they really did. I mean, they acted like nihilists. And, listen, they got their pound of flesh. They made the bill better. They got the acorn subsidy out. Right. And then they turned around and pulled this stunt yesterday. Now, there's a reason why they did that. And the main reason why is that you had a lack of public support for this thing. And the reason, and that is directly attributable to Hank Paulson. I mean, Hank Paulson's a smart guy and at bottom a good man, but he never sold this thing to the public. And this is what he did that was fascinating. He sold it to the most hated figure if you're a Republican in the House of Representatives, Nancy Pelosi. He sold it to the Democrats. He never sold it to the public in general, or the Republicans. And then when Nancy Pelosi pulled that stunt, I'll tell you, I was on Power Lunch when she gave that speech. Yeah. And I remember telling John Hardwood and Steve Leisman is that is the exact worst speech you can give at this time. Because here's what you know that these Republicans are ideologues. and their support for this was tepid. Apparently, they Boehner had 70, 75 of these guys.
It
but
definitely
it was really
gave them the out. It gave them an excuse.
But it was really tepid. And then she came in there, and I'll tell you, I listened to that speech, and I was piping mad because you just got this ominous feeling that she gave a campaign speech, attacked the Republicans for causing everything, including smallpox, in Africa, and she basically torched the deal at that point.
So what happens now, Charlie? What do you think?
Well, when I talk to my guys in Washington, they think there's going to still be a deal.
Really?
They do. They think that when you watch the markets go down 700 points yesterday, today's a pivotal day. It's interesting. The chances of the deal go up as pain is increased, which is scary.
So we want to see the market trade down today if we want to convince them that these things...
I don't want to see it trade down, but yes, that's the whole thing. Listen, all you have to do is, these Republicans are somewhat influenced by the editorial pages of the Wall Street Journal, by the National Review, by the Weekly Standard, guys like Bill Kristol, Tom Lowry of the National Review, Rich Lowry, I'm sorry, of the National Review, and they're all coming out very strongly in favor of this plan or some part of this plan. And here's what the Republicans, I think, it's obvious I'm pretty right of center, but here's the thing that they forget. They voted against this and offered no alternative, no workable alternative. It's one thing to vote against this thing, hold it up during the weekend, and fight
they're
for
being offered
things that are
now,
right.
Charlie. Just go to take FDIC to $1 million. I just wonder how this does turn out. I don't know, Charlie, but if you don't, like a lion, if you don't kill it and you let it sort of come back and heal for it, we're going to go 2 or 3 days. And if you didn't pass it the first time, why do we think that it could be even worse than 12 next time? It could be 30. These guys might get emboldened. I'm reading the viewer mail. I know they're hearing from their constituents, probably saying thank you for not letting this go.
Well, here's the problem, and there is a time when you got to put the constituents aside and lead. And now's the time to do it.
Well, you're assuming that this is the right thing to do. There's a lot of people,
Joe, what do you think? Listen, I don't know.
I don't know.
The alternative seems worse. And it seems like a start. You know what I'm saying? It seems like a start. Listen, it kills me that the country has to go into $700 billion of debt.
Right.
You're looking at Barack Obama, and I'm sorry to politicize this, but here's the thing. He wants to increase government even more. And, we're talking about he's likely, right now he would be president, and he's looking to do that. So you're talking about even more debt and taxes. And yes, the whole thing scares me in terms of that aspect of the federal government intruding on my life and the lives of people, and basically, taking this country in a more socialist direction. That does scare the hell out of me. But I will tell you this plan, as it's designed, is designed basically to make life better for average people.
That's what your guys at San Pietro at lunch tell you every day, though, Charlie.
Joe, I'm much more populist than you, okay? I have family that actually are working class, and that's where I come from. And I'm telling you, this needs to be sold, and it never was sold. If you want this, listen, if I can't use my credit card tomorrow, which essentially is a short-term loan, because I don't want to pull the money out of the bank, I get paid every 2 weeks. Yeah. If I can't do that, which we are, I'm not saying we're there now, but we are heading to that.
You do talk to Wall Streeters a lot, Charlie, and everyone that you talk to is going to be for this.
I talk to a lot of people, Joe. I talk to a lot of people, and I get. And by the way, I get the emails that you guys get.
Yeah. The bigger point is we're hearing from people who understand exactly what you're talking about, and they say we're not seeing it. We are not seeing it yet, and we don't see what the big fire. Why people are yelling fire?
Well, listen,
what do you say to them?
At some point, you give up the argument and you do what you think is right if you're a congressman or and I could just tell you that, it's scary right now if you know how Wall Street works a little bit.
But is there a plan B that's being worked on, Charlie? Have you heard
FDIC.
Yes, there's that. There's a lot of different plans. Listen, they have to do something. And that's why I think in the end, something maybe more creative than this will come out of it. Or maybe this with some more caveats, some more quote-unquote transparency or protection.
Right.
But which side do you tweak, Charlie? You try and bring the Republicans on board or try and bring more Democrats on board? You go further left or further right? You lose the guys that you had in the first place.
I don't think the country, here's the fascinating thing about the public opinion right now. The country may want change. They may be tired of the Republican brand and all that. But I don't know if they want the sort of vast amounts of socialism that the left wants to bring. And I think... I think maybe if the Republicans were constructive, they could be major players in this thing. And I will tell you this, Joe, listen, I talk to more than the 5 people I hang out with at San Pietro. I mean,
There's
this
got to be 40 or 50 people.
This is elementary. This is economics at some point. You know what's happening in the credit market. And here's what's fascinating. Everybody looks at the stock market on this, and it just shows you the lack of sort of depth.
But even the credit market hasn't. It's not as bad as it was a week and a half ago, Charlie.
The credit markets are better today?
Not as bad as that. We didn't go to zero.
Not as bad as that. Thank God we're not in the abyss. We're just looking into the
question is it not that bad because it's not going to get that bad without a plan, or because because people think there's going to be a plan? That's what we don't know.
Joe,
today.
here's the thing you have to ask yourself. And listen, this plan was not a panacea, and I'm not saying vote. Listen, I'm not saying that this is the greatest thing in the world. But if all the banks out there that are holding this mortgage garbage on their books, that's garbage now. It may be paying off. If they had to sell that stuff, you would have bank failures left and right. You would have the system basically freeze up. Now, here's the thing. When you talk to people, I talk to people on Wall Street who are saying, let it fail out for now. At least we get it out of the system. We deleverage immediately as opposed to the slow bleed.
Yeah.
That's the scary thing. I mean, which is better? I don't know.
Yeah. We'll talk to you soon, Charlie. Thanks for that. Charlie Gasparino at 30 Rock. Beck?
Yeah, that's right. Okay, a record session, obviously, yesterday on Wall Street. Congress failing to pass that plan that we've been talking about. Equities tumbling. The Dow down 777 points, closing point drop, and its biggest closing point drop in history. Joining us right now is Bob Dahl. He is the Vice Chairman and Global Chief Investment Officer for Equities at BlackRock. And Bob, you've heard us going back and forth about this bill. In your opinion, how important is it for Congress to actually pass something this week?
I think it's pretty important, both for Wall Street and, more importantly, for Main Street, Becky. Look, as Charlie just said, this bill's no panacea, but what it did do, or what it will do if repassed, is take some of the downside risk out. Markets freezing up, the ability to begin to address liquidity and reliquefaction. That's what we need to get the system back on track, and this bill was one step along the way.
Okay, if that doesn't happen, then what?
Well, my guess is, as is Charlie's, is they'll try to put it Humpty Dumpty back together again, bring a few more people on board, change some terms, add some things. So I think it's better than 50% probability, but nowhere near 100 that this thing gets passed. Either way, my guess is that monetary policy will step up to the plate again. I'm hoping that central bankers around the world are talking, and we could get a coordinated central bank rate cut if we need it to again, reduce fear, increase confidence, and begin to restore some liquidity.
Bob, as a guy who's managing $1 trillion in these portfolios, what do you do to try and hedge your bets on this?
Well, in portfolios, we're trying to beat an equity benchmark. You hug your benchmark a little bit more in periods of high uncertainty, and we've done some of that. In accounts that are more absolute return oriented, you have to obviously stick with quality, stick with liquidity. Don't be a hero. Be with strong balance sheets, companies that will be here, that have good free cash flow out of their income statements, name brands, and that sort of thing.
All 30 of the Dow Industrial, the components in the Dow Industrial Average fell yesterday. How do you pick the good names out of that?
Well, you know, some were down a lot more than others. On a down 700-point day, you can't find too many stocks that were up. And so you go with a Procter & Gamble, which was down a lot less than the average stock out there. You go with name brands, again, that have products and services that people are going to buy regardless of what the economy looks like.
I guess one of the silver linings, Bob, is that that commodity trade got crushed, right? I mean, whether or not what that says about the economy may be bad, but when you look at gasoline, copper below $3, I mean, that winning trade is gone for now. And that leaves more room for equities to win at some point, right?
Yes, I would think that's right, that financial assets at some point come back. Look, we've got to watch, as an equity guy, we've got to watch corporate spreads. They haven't narrowed very much. We need that to narrow. But after the VIX goes to nearly 50, as it did yesterday, a huge measure of volatility, of capitulation, we usually get, at a minimum, a significant knee-jerk bounce. I think we will get that. Durability will depend on the passage of this bill. Potential monetary policy continued reliquefaction of the system.
Better not bounce till you get your thing passed, Bob. If it bounces. All right. Now,
we can't.
Let me go back. You're hugging a benchmark. Have you tried like a stuffed animal or a teddy bear?
We do that too. It's the benchmark during the day and the stuffed animal
I was
at
wondering
night.
because you sounded so cold and calculating. Hugging your benchmark. I know what you're really probably. You've got that big, teddy bear or something. Vermont teddy bear. We all are. Wachovia yesterday, AIG last week, Fannie, Freddie, Bear Stearns, Lehman, Merrill. It's gold. We don't even have investment banks. So maybe you're right. Maybe.
Hey, Bob. At what point would you have to say to yourself, all right, there's clearly no deal happening before the election, and how would that alter your short to medium term strategy?
Well, that would have to make us more concerned. As Charlie mentioned earlier, liquidity in the system gets reduced. We're not able to reliquefy, and then we're going to have to depend on monetary policy authorities globally coordinated, including the ECB. And I think that would be a nice, necessary salve to help get us through. But it would not solve our problems. It's going to take more time, more write-offs, more consolidation in the financial sector, but some helpful monetary and fiscal policy can help get us through.
But would that mean that you'd be exiting equities and going to the short end? Or, what would your overall...
Or cash?
Well, in many of our balanced and absolute portfolios, we have lots of cash, lots of treasury bills, lots of, quote, safer things. And we're already on that trade. I think the next move has to be, okay, if we do get a bill, if we do get coordinated central bank action, how big can the rally be? Is this a rally in a bear market, or is there a more permanent bottom? Those questions will get asked down the line. So to become defensive is a thing you should have done already. I don't think you do that today.
What about all that cash? Where do you keep it?
Well, Treasury bills, a very low return. Other near-term cash vehicles, they don't have a great return, but they're at least preserving our clients' money in periods where risk assets are falling.
Bob, this is the end of the quarter. It's the end of the month. What's that going to mean for trading today?
I don't think it will have a whole lot of bearing. I think all eyes will be on this bill, on the action inside the market, on the volatility levels, and on liquidity itself rather than the calendar, Becky.
Are you worried about hedge fund redemptions?
For sure. They've been happening all along. They will continue. Quarter end will be another mark of that, but that's not new. Hedge fund failures have increased. They will stay high in this environment.
We are watching the futures up significantly this morning, maybe 270 points above the close yesterday. Does that make you feel better about things, or does that make you think Congress will look at that and say, okay, they don't need this bill after all?
Well, I think Congress should know as a result of yesterday that their backs are a bit to the wall, and anybody who thinks it's only Wall Street, it will eventually get to Main Street. We'll have a horrible economy, rising unemployment if we don't address these problems. And hopefully that message will get through to the voters, who will get through to their congressmen, so they have the ability to get this bill through, Becky.
We're looking at some of your notes yesterday, Bob. It looks like you've thrown in, I don't want to say thrown in the towel, but you are looking at least a mild recession now, right? Whereas before you were not.
A good point. Yes, we've been saying no recession, no recovery. We think the frontal assault on the economy and the financial crisis of the last couple of weeks takes a fragile economy, gives us, unfortunately, a mild recession and still a very slow recovery.
So 2.8 was the best we'll see for how long, do you think?
I think for quite some time. We had been arguing even before this 0 to 2% real growth. I think to climb back to trend, 2 3/4, let's call it, will take some time. Now we'll get a fluky quarter down the line somewhere. Will that be the case? But on a trailing 12, I think it could be a couple of years before we see 3 or more.
Hey, Bob, thank you very much for joining us this morning.
Keep your seatbelts on.
Yeah, we will. Bob Dahl.
Keep your teddy bear close.
Take a look at futures this morning. It is going to be a busy morning. Whether or not you're paying attention to the bailout, which everybody is, we will get Case-Shiller numbers. Everybody wants to know just how far housing prices can fall in this country. Here's a look at oil, up $1.85, but again, down $10 yesterday. The biggest dollar decline since 1991. When we come back this morning, Joe has a list of stocks to watch. Did you know that?
No.
A lot more as the opening bell gets closer and closer. Squawk's back in 2 minutes.
Time now for today's Aflac trivia question. What was the first symbol of the U.S. Post Office? The answer when CNBC Squawk Box continues.
Today, Turbulent markets, tumultuous trades. Is your nest egg scrambled or fried? Get the smart moves you need for fast money. CNBC 5 Eastern. In these critical times, turn to CNBC.com. All week, CNBC.com will feature live streams of CNBC Asia and Europe beginning at 6 p.m. Eastern.
Now the answer to today's AFLAC trivia question. What was the first symbol of the U.S. Post Office? The answer? Mercury, the messenger of the Roman gods. The current symbol, the American eagle, was first introduced in 1970.
Figure this out. Anyway, let's take a look at some stocks to watch this morning. Start with Pepsi bottling. Seems like a good business. You know, the stock's down a lot, obviously, you can see, but company did beat expectations, 2 cents ahead. It's not a financial, but revenue was a little bit light, $3.8 billion. You can see, though, that the stock has come down hard. It was down hard yesterday. Wachovia is actually on this list. UBS is estimating that the stock's fair value is $2 a share. $2 a share.
A.G. Edwards and Evergreen?
Fifth Third was downgraded. Wells Fargo upgraded at R.W. Baer to neutral on Fifth Third and up to neutral from underperform for Wells. Interesting. Finally, Pfizer says here is going to scrap some of its efforts to develop certain drugs for heart disease. Also, it's moving away from treatments for obesity and bone health to focus on more positive areas. You're supposed to hear about that at some point today.
It was hard to find stocks that did well yesterday.
Yeah. Right.
Campbell's was one of them that did well.
I know.
Campbell's soup, but
Coke,
you had to look
maybe,
around at
P&G.
some of the all of the down ones into
Right,
lower.
that's
So
true.
P&G was down too, but it was tough to find anything that.
Soup kitchens?
That's what Larry Kudlow said last.
He did?
or-
Well, that's the obvious.
was
Yeah.
it? No, maybe it was Haynes.
Who?
Someone said that last night. Maybe Mark Haynes. Someone said that last night.
Haynes.
Yeah, Mark Haynes.
The underwear?
The underwear? No.
Yeah, Mark Haynes said that. In fact, that is who it was.
Not familiar
Anyway,
with
coming up this morning, holding out hope. Congressman Chris Van Hollen says what he thinks is that there is still some life for the financial rescue plan. We're going to ask him what we can expect from Congress when Congress comes back from the holiday. Also, after the break, we're going to get more reaction to yesterday's vote on the floor. Aaron's assistant.
I do believe that we could have gotten there today had it not been for this partisan speech that the Speaker gave on the floor of the House. The Speaker had to give a partisan voice that poisoned our conference, caused the number of members that we thought we could get to go south.
You're watching Squawk Box on CNBC, first in business worldwide.
They took their idea from obscurity to nationwide sensation. Ordinary people doing extraordinary things.
Give me a sign. I'm either supposed to do this or I'm not.
Making a business venture a business adventure.
If the next guy can do it, I can do it, and I can do it better.
Donnie Deutsch hosts The Entrepreneurs. Premieres tomorrow, CNBC 10 Eastern.
Ahead this morning, Congressman Chris Van Hollen, chairman of the Democratic Congressional Campaign Committee. We'll talk to him. You know, you used to complain, leave the politics out of the business coverage. How do we do it now? We can't. It's
Everything's political.
It's one story now. So, you know, we're having him on. Besides, if you do write in that you don't like it, there's so many emails we won't see it. Anyway, plus a closer look at treasuries. We'll find out how the fixed income markets are handling the crisis on Wall Street, whether or not traders are expecting a fix anytime soon. As we head to break, why Congressman Linda Sanchez didn't vote yes for the bill yesterday.
Most Americans own one piece of property, and that's the home that they live in. And I couldn't, in good conscience, vote to bail out Wall Street without something in there for American families that are at risk of losing their homes.
Welcome back to Squawk Box. Let's get a check on the markets right now. Futures were up indicating up 300, then maybe 200 now, improving again. And your guess is as good as ours. Is it because people are assuming a bill gets done, or because people are already looking at life without the possibility, perhaps, of the bailout, looking beyond it? Nobody knows at this point. Oil is moving in a similar direction. If maybe the world doesn't end, maybe we'll still be using oil. So today it's up $2, getting back some of that big $10 loss that it saw yesterday.
People don't like the idea of having to put this much taxpayer money on the line as a result of a problem that they think has been caused by incompetence and inaction and bad policies over the last 7 years with respect to the economy. Nobody likes that.
Congressman Chris Van Hollen yesterday right here on Squawk Box. That was ahead of the House vote. He is back this morning for some reaction and more importantly to tell us what's next. Congressman of Maryland, thank you so much for being back with us.
Good to be with you.
As curious as we are to know what happened behind the scenes and how it all came down yesterday, everyone wants to know if there will be a vote this week after Thursday. What do you think?
Sure. Well, yesterday was a tumultuous day. We're now trying to pick the pieces back up and put together a package that can get a majority vote. Look, this is tough stuff. Nobody liked the package we had yesterday. It was the product of compromise on a bipartisan basis. And so we're going to continue to work to try and get that compromise, because I think there's a consensus among most members of Congress that the cost of doing nothing is way too great, that the result will be the contagion will spread from Wall Street to Main Street, the credit markets will continue to be frozen up. So we're going to be working hard. Conversations are already taking place. And once we know we've got a majority, then we will come back to vote.
Yeah,
and people are working as we speak.
That's sort of what we figured the speaker would have done yesterday. Once you think you have the votes, you bring it to the floor. Any idea why that wasn't the case?
Well, the reason is we've got to make sure next time we bring it to the floor, we get a majority vote. So you saw how what kind of process was required to get us to the floor the other day, and the bill went down. So she reached out immediately to Secretary Paulson, and as you heard from the Republican leadership, they are apparently interested in also working together. Conversations are already underway, and the hope will be that we can pull something together. But again, you got to make sure you get it right. There's no point in bringing everybody back for a vote only to see it collapse again.
Right. We've had this discussion earlier this morning about how you remedy this. Do you go after more Democrats, the 95 Dems who voted against this, or try to skew right and create a bridge? What's going to be the easier path?
Well, again, you're going to have to bring both sides, I think, to the table somehow. So that may mean you need to add something to help bring on some more Republicans and something that will help bring on more Democrats.
Isn't that sort of a zero sum? I mean, you gain some on one side, you give up some on the other?
It's possible. Let's see. The problem is if you just add stuff to the right, you may lose stuff on the other side because that's why this is such a delicate balance. And that's why it was important to try and bring everybody to the table here. And unfortunately, at the end of the day, as you know, the Republicans didn't have their share of the votes. But anyway, that's water under the bridge. We are trying to move forward here.
12 votes made the difference yesterday.
Yes.
Is there room to lean on members of Congress without making widespread changes to the text of the bill, or does this thing need to be changed on paper?
Well, I think the answer to that question depends in part on what people hear from their constituents when they're back home and how the markets are reacting, not just the stock market, but how the credit freeze is beginning to impact local businesses, small businesses on Main Street, and whether or not people are saying, look, we understand that you don't like everything in this bill, but the fact of the matter is the costs of doing nothing are getting too high. And so if members hear that from their constituents back home, it is possible that you could bring this bill up. As you know, it's always easier to have some changes that people can point to, at least to say that there's a reason why they changed their vote.
Now I'm supporting it, right? It got fixed, and now I'm for it.
Well, exactly, and that's going to be the challenge going forward. Assuming people come back to Congress and the conversations that take place today and tomorrow and until we get a deal, assuming that people have changed their mind and want to support a package, the question is going to be what has to be put in it, so that they can say we got something in it that was not there before.
It will be easier to do that with some democratically friendly stuff, but then you'd own it. You willing to do that?
Well, sure, yes. Look, here's the issue. We could own it, but the question would then be whether or not the president would support it and sign it. And again, here's what got left out from the Democratic side. We wanted protections for homeowners in bankruptcy for their primary residence. As you know, for your second, third, fourth home, you're protected in bankruptcy. You're not protected on your first home. We had a second economic stimulus package. We don't just want to stop bad things from happening. We want to try and generate new jobs. So we had a $60 billion infrastructure package for new bridges, roads, transportation infrastructure. We wanted that part of the deal. We also wanted a 100% guarantee that the taxpayer would be made whole at the end of the day.
But, Congressman, some of those things, I mean, is this a situation where we should be acting with urgency and that this is needed immediately, or is this something where you can take the time to put everything you want into the bill? My question is, if there is a sense of urgency, how can you load it up with other things?
Well, there is a sense of urgency, and that's why we didn't load it up with other things. And despite the fact that those things were not in the bill, 2/3 of the Democrats voted for this. What Speaker Pelosi said to the Republicans was, look, if these things aren't in the bill, there are going to be some of our members that aren't going to support it. And so both sides reached a compromise where they said they could go back to their different caucuses and get half of their caucuses. And Speaker Pelosi went back, and 2/3 supported the package that we ended up with, because we did put some checks and clearly changed the Paulson proposal. But when the Republicans went to their caucus, they didn't. Even after John McCain said he'd rounded up the votes, they weren't there.
You could get 12 more Democrats with a couple of those things, and Bush and Paulson wouldn't be against it. Easier probably than you're going to get. Some of these guys are probably getting even more. I'm looking at the mail we're getting, Congressman, and now people are getting emboldened that the market's going to be up today. And
see, we didn't need it after all.
Yeah, we didn't need it after all. Might be easier to just own it and do it your way and not even worry about the Republicans. And Bush will still sign it, right?
Well, that's not what they said, and that was the challenge. Let me just give you one example. We wanted at the end of the day to say, 5 years from now, if the amount that the taxpayers gotten back, after all, as you know, the taxpayers taking these securities, we're taking some risk, but as the market returns and as the economy improves, the idea is the taxpayer can make this money back. But we said if at the end of the day there's a gap, that there should be some kind of fee levied across all financial institutions, a small fee that could be small and last for until that balance was paid off. That seems like a reasonable request. At the end, we would be able to say 100% guarantee that the taxpayer's not going to be left holding the bag, not one penny of taxpayer money. But they didn't take that. We did get a provision in requiring that the president submit a plan after 5 years to do something. But again, that's not a 100% guarantee. It was an improvement, but not a guarantee. And then there are the bankruptcy provisions.
Right.
So again, despite the fact those elements were not in there, we had 2/3 on our side, and the fact of the matter is they were supposed to bring their part to the table.
And you mentioned constituents and the markets today. I mean, I guess it doesn't really help to go back to your constituents and point out that 3-month dollar LIBOR priced higher today, right? I mean, that's not going to resonate with them.
The end of the quarter.
Well, I mean, look. The question is going to be how this is going to begin, whether it begins to impact Main Street, and it's the credit freeze, as you know, that is the major factor there. Now, if credit loosens up, then people will begin to question.
No speeches before the next vote, though, Congressman. How about that?
There you go. Well, no, listen, that let me just say one thing on there.
Right,
because
if you must. But
because a number of Republicans themselves have said that was ridiculous. Because if you accept that proposition.
You still don't want to say, this great bipartisan bill, and when in fact it was all the Republicans' fault in the first place. I mean, you're not going to, it's not going to help.
No, listen, there were Republicans and Democrats. All of us have different views of how we got there. Most of the American people, I think, agree that the economic policies of the last 8 years have gotten us into the ditch.
That was not a good moment, I think, for anyone involved. One last thing, Congressman. Is there any chance that nothing is reintroduced this week or next?
All I can say is people are working as we speak. People have been on the phones yesterday, today. We'll continue to work until we can put something together and try and make sure we get a majority vote. Again, the key is to make sure this doesn't happen again.
Yeah. Congressman, we appreciate you've been generous with your time this week, and I know it's been busy. Good to see you again.
Good to see you. Thank you.
He should make the speech.
Yeah.
He could do it.
All right, still to come this morning, we are expecting the president to speak on yesterday's fiasco, everything that happened. That's coming up 8:45 Eastern Time. We will carry those remarks live right here on Squawk Box. Stay right here. Headed towards the opening bell, and so far, futures are looking a little better. You're wondering what could be going on today? Take one look at what's been happening with gold prices. Right now, up by $9.60 to $9.04. That's after a $23 gain yesterday. More Squawk right after this.
Direct from the NYSE and the NASDAQ to you. The most accurate, free, real-time quotes on the web or your mobile device are on CNBC.com.
This is the CBOE Volatility Index, known as the fear barometer for Wall Street, rising sharply. I want to get a bid and ask on that today. I wonder how much that's going to fall, because it was up 12. We'll see though with where LIBOR is today. But that happened after the House, failed to pass the bailout plan. It's the highest level in 6 years. That's driving many investors into treasuries. The flight into safety causing yields to fall to the lowest levels since FDR was president, and he tried to save the stock market back in 1930.
On television? Or no, television.
Oh, yeah, on TV. Oh, no, that wasn't FDR. Sorry. That's the other vice presidential candidate that... Anyway, Jim Bianco is president of Bianco Research. Tony Crescenzi, chief bond market strategist at Miller Tabak. I need to ask both of you guys, this LIBOR thing today, gee, many Christmas. Is that the end of the quarter, Jim or Tony? Is that all it is, or what? What is it, almost 7%?
It's much more than quarter end, as Jim knows, and you know, and so the viewers know. Quarter end has been an issue for the past year. We've seen pressures, large ones at times, a couple of the times, but nothing like this, of course. We haven't seen the spreads between LIBOR and Fed funds like this.
Then why is the S&P bouncing like that? Why are we up 300 points then? I mean, 7% should scare anyone, shouldn't it, Tony?
Why aren't we up more, probably is the question. Let Jim speak for now.
Yeah, go ahead, Jim.
Yeah, I was going to say this is a lot more than quarter end. This is even more than what you would expect on year end. So, yeah, there might be a little bit in there, but there's something more going on. As far as the S&P bouncing, it sold off 200 points on the close yesterday. Now we're up 200 points. So that's all you've gotten back right now is the last 10 minutes of trading from yesterday as far as the rally goes. The markets are definitely looking ahead. LIBOR is a measure of how bad the situation is right now. But we're also hoping that it gets better because it can't stay like this. If it stays like this, we'll be back in the Stone Age here fairly soon.
What did I see? What was it? 6 7/8. Which LIBOR rate was that?
I haven't been in front of the screen, but I think what we want to focus on is something beyond 1 day and 1 week.
Okay.
3-month LIBOR. 3-month LIBOR is extraordinarily elevated. Look, what's typical for LIBOR, and it's been around 4% this week, and as you said, it's much higher this morning, is to be an eighth of a point to a quarter of a point over the Fed funds rate. And so that would put it at 2 1/8 or 2 1/4. It had been elevated at 280 until the crisis really broke out. What I mean is it had been at 280 for months until this flared up again. So look, the Fed's put a lot of water in the pool. People are just very afraid to swim. I have to think like this, big top down. I have put out a book this week called Investing from the Top Down. And look, we've had 3 million people not paying the mortgages on time. It's hard to believe, and you have to take a big step back here, that the world's 6 billion inhabitants and the progress of mankind will be held back by these few million people. Things will change, but figuring out the timing of that's kind of tricky for sure.
Yeah, 678 was overnight sterling LIBOR.
Okay, sterling LIBOR.
There's a lot. The big number, I guess, Tony, is this 405 3-month dollar, right?
The banks aren't lending to each other, and very critical, companies aren't raising money. The last 2 weeks, we've seen $5 billion of money raised by U.S. corporations. That's what we usually see in a particular day. And the $1.7 trillion commercial paper market is under siege. We've seen it contract by $100 billion the last 2 weeks. We'll know Thursday how much it contracted this week. That's the money used to make payrolls and build inventories.
Yeah.
It can cause a big drop in employment. It's a very devastating.
Yeah, that's a good point. And Jim, I mean, what would the touchstones be? How would that play itself out on a day-by-day basis? Would we see, if an employer couldn't meet payroll, would they just close? Would we start seeing, would it show up in bankruptcies? Or how would it happen on metrics that we see on a daily basis almost?
I think that those would be the secondary metrics. The primary metrics, I think you got to take a step back. And all the discussion we've had over the last few weeks, a lot of people are missing a very important part of what's happening with the credit markets. The 3.5 million mortgages that Tony talks about that aren't being paid have resulted in about $600 or $700 billion of write-downs in the banking system. The banking system is now simply too small given the size of the economy. There's not enough credit to go around right now. So we ration out the credit, and we do it through these very high interest rates. We need to do one of two things: either expand the banking system to meet the demand that is out there, or we need to deleverage, which is a very, very painful process. So as long as the banking system remains too small, we're going to continue to have problems, and it's going to show up in banks, in WAMU and in Wachovia. They borrowed the most from each other. Now, eventually, it will get to that secondary point. It's going to come down into payrolls. It's going to come down into you won't be able to get a home mortgage or you won't be able to get a car loan.
Okay.
But right now, it's in the financial system. And eventually, it depends on how much longer this goes on. If we continue to contract the banking system at the rate we're going now, it could be a few weeks. Yesterday, just yesterday, 5 banks were either nationalized or Wachovia was forced into a merger. Total assets, $1.7 trillion. That's more assets than the entire S&L crisis of the 1980s just yesterday. So we can't continue this for much more than a few more weeks before eventually is going to be middle of October if we go at this rate.
Yeah, Tony. Yeah, the USD. I guess the sterling was fixed at 6.78. Dollar fixed at 6.875. The euro LIBOR at 4.48. But that is a U.S. dollar at 6.875. That's a record, isn't it? Or that's
relative to Fed funds, it probably is. We know the highest it got to in the '87 crash was a little over 2 points. The spread between LIBOR and Fed funds.
Don't bring up that time period.
Yeah, that is a record. The old record was actually last Thursday, and when we broke that record late last week, so
end of quarter.
That market is the opposite of getting better. It's getting worse.
Guys, let me ask you this, Tony. Do you think that the plan from yesterday, if Congress had voted yes, would that be enough to restore confidence not only to the banking system, but to the commercial paper market as well?
It would have begun to thaw conditions in the money market, I believe. And it's very important. The money market issue, particularly commercial paper, most commercial paper matures between 30 and 45 days. So you really don't have a lot of time to fix that situation. But I've pointed out since last week the idea that when there's a financial shock or any kind of shock, because people just can't handle it right away, it takes a bit of time for people to recover. Think of a death in a family. People don't recover right away. In the financial markets in '87, it took a couple of months before LIBOR had its peak. There was a peak the day after the crash, but it settled down and went right back up in December of '87. Then in '98, after Russia defaulted and long-term capital collapsed, LIBOR to Fed funds didn't peak till 2 months later. So it takes time for frayed nerves to calm down. So I think even with passage yesterday, it would have been a process, not an event, to fix things, but it would have helped the money market along, and the process would have been put in motion.
Yeah, go ahead, Jim.
I was just going to say I'm a little more pessimistic than Tony because I didn't think that bill that they were voting on yesterday was going to do much good, if anything. Yes, it would have given a psychological boost, but the problem is the banking system's too small. The banking system needs capital. It doesn't need to reprice a bunch of mortgage securities and then suspend mark-to-market accounting at the same time, kind of undo, make a market transparent and then make it untransparent at the same time. We would be better off looking at some kind of a situation where we were injecting capital straight into the banks by having the government buy preferred stock or something along those lines, which would make a lot more sense. Would it have given us a psychological boost? Yes, but it would have been a lot like all of the other Paulson plans. None of them have worked so far. And this is just the Civ bailout version 2008, which failed last year to get through, And now that's what we've got with this plan.
Thank you for saying that,
That's
Jim.
what a lot of people say.
You guys agree on that?
Paulson
I
Asset
completely
Management,
agree.
right?
So is it going to happen or not in your guys' view? And we got to go.
I think it is, but it's taking money out of one area of investment
So
and
it
putting it in
still
another.
happens.
So it doesn't change things, and we need the Fed to expand its balance sheet right now.
Still going to happen, but it's not going to work.
Better
That's
than,
great.
would you argue it's better than nothing, Tony?
It is for sure, because I think it would reduce the mortgage rates, and ultimately that's the goal. As long as the dollar's stable, mortgage rates would probably come down because the government would be buying mortgage-backed securities.
It's like,
I don't think it would have hurt, but say it's better than nothing is hardly an endorsement that you're going to fix the problem.
Yeah, well, I mean, we could potentially be looking at nothing, so we have to consider all the alternatives. Guys, thank you. Jim, Tony, talk to you later.
Better than a poke in the eye, I guess. Anyway, the fear factor, as we were just talking about, driving a lot of people into treasuries. Let's get the reaction from Treasury Secretary Hank Paulson on yesterday's big House vote for a financial rescue package.
We had a plan that we'd worked very hard on that did the job, gave us the tools we needed to protect the financial markets, to protect the American people. So where we go from here is something we're going to be working on with congressional leaders, because we need to get something done, and we're going to be working hard on it.
That is a live shot of Chicago, and this is a chart of the in-trade metrics, I guess you could call them, about who might win the presidential election, futures for the election. Just 5 weeks away, and with the crisis on Wall Street, take a look at some of the charts for Obama and for McCain over the past month.
Obama's picked up some steam in the last few days.
Yes.
It shows in those charts. What these charts tell you, basically, is Obama about 63% odds of winning, at least according to the futures. McCain, 37%. These numbers change pretty rapidly, but there is real money being bet on these things. That's why we watch it.
Although it's not a lot, but there
is real money. All right, we are counting down to the opening bell. We're also waiting for President Bush. He is expected to make a statement on the bailout plan, the rescue plan, whatever you want to call this, some sort of plan. 8:45 a.m. Eastern time. We'll be watching. First, though, legendary oil man Boone Pickens not so happy with the nation's leadership right now through this crisis. We're going to find out why. Stay right here. More Squawk right after this.
Today, when the legislation came to the floor, the Democratic side more than lived up to its side of the bargain. While the legislation may have failed, the crisis is still with us.
Right here is the reason I believe why this vote failed. And this is Speaker Pelosi's speech that frankly struck the tone of partisanship that frankly was inappropriate in this discussion.
We've got much work to do, and this is much too important to simply let fail.
Good morning. Welcome back to Squawk Box here on CNBC, first in business worldwide. I'm Carl Quintanilla, along with Joe Kernan and Becky Quick. We're going to hear a lot more on the failure to pass the bailout plan out of Washington this morning. And coming up at 8:45 a.m. Eastern Time, President Bush will make a statement on the economic rescue plan. We will be carrying that event live. Ahead of that, though, take a look at the futures. We are going to get a bounce. Compared to yesterday's losses, it's not a lot, but we are in the neighborhood of 250 to 300 points to the upside if you're judging futures. And Europe has been putting up a pretty defiant fight trying to get back to the flat line all morning long. This is where we're coming back from. A 777-point decline on the Dow, biggest point decline ever, as you've probably heard by now, 17th biggest percentage decline. For the S&P, down triple digits, and the NASDAQ was down 9% in a very difficult day, Joe.
Looking at those charts, and I watched it close yesterday, we did lose about 300 points in the last 10 minutes or so. So getting back 300 just puts us to where we were at 350. But when we were down 400, it was like,
right.
Anyway, Wall Street had a clear reaction to yesterday's events in Washington. CNBC's on-air editor Charlie Gasparino joins us now with more on resurrecting the bailout bill And I guess that's why we're rebounding, Charlie. Most people saying that they're going to do it again, and this time maybe it goes through. That's the feeling, I guess. Is that what you're hearing?
Well, they're going to do something, and that's what a lot of people on the street figure, that there'll be something which is better than nothing to address the credit problem. But I'll tell you, man, when you think of, listen, I listened to Nancy Pelosi's speech. It was during Power Lunch yesterday. And I was on there with Steve Leisman and John Harwood, and I just had this ominous feeling. I essentially said it on the air that if this is the last thing we need right now because Republican support for this thing is so tepid and fluid. But if it takes a speech, think about it this way, and you got to agree with Barney Frank a little bit on this. If it takes a little hurt feelings to derail something that you were nominally in favor of, just a few minutes before, then, you got to think that maybe, the two sides are just so far apart. And, what it really comes down to, I think you have to say, is that Hank Paulson did a great job selling this to Nancy Pelosi, selling it to Barney Frank, who he has apparently a close relationship with, working relationship. That's Hank Paulson, the Treasury Secretary, and Barney Frank, the head of the House Financial Services Committee. But he did a lousy job selling it to the Republicans, who do have a say here, and he did a real lousy job selling it to the public, who have a really big say here. And that's why we're where we are right now. Listen, no one understands what it means to have the credit markets locked up. And maybe this isn't a perfect plan. You had those guests on before. I thought it was a fascinating conversation. Crescenzi and was it Bianco? I thought that was one of the most fascinating conversations about the credit crunch and, basically ways to deal with this and why this is a very difficult problem. But at least this was a start. And, what's scary about the Republicans is that they didn't even come out with a reasonable proposal. And I think that's, maybe we'll get something in the next couple of days. But if it's just hurt feelings that breaks this up, then you got to be really worried. And that's what has a lot of people on Wall Street worried. I can tell you yesterday when I was talking to, people in executive suites, they could not believe it. Because, you see, there's a difference here. Wall Street is thinking rationally about this. I can tell you when the night of the Lehman, they had those big meetings over the weekend when Lehman was going into bankruptcy and they were trying to put together a bailout plan. I'm not going to say who I was talking to, but there was a top executive at one of the major firms who left town. And he said he left town. He goes, listen, I'm thinking rationally here. They're going to do something. They're going to have to bail out Lehman. They're going to have to do some private sector plan because if they don't, it'll be, Armageddon. And you know what? Rational in these sort of circumstances, sometimes rational thinking does not work. And by the way, they didn't bail it out. And I'll tell you, the Journal did a pretty interesting story yesterday about the after effects of Lehman and what happened after that and how that kind of led to what we're dealing with right now. It's pretty fascinating. The other fascinating thing is I think it was Bianco who mentioned that none of Paulson's bailout plans so far have really worked. And, he's 0 for 4 or something like that. No Civ bailout, bailed out AIG, but, where's the markets after that? That's 3, I guess. I'm sure there's another one in there. But it's really, we're in a really precarious position when you talk to Wall Street executives, because a lot of this is defying, these guys try to think rationally, even though they get involved in irrational things all the time, like putting billions of dollars of risky CDOs on their balance sheets.
Mm-hmm. That's not the first time, Charlie, that someone said the banking system needs capital in the form of the government buying preferreds. That's been talked about before here. Some people say that this is not. You don't have your eye on the right target here. And you're right, at least it's something, but it's a $700 billion something that constituents and people in across the country seem to not just either they're resistant to understanding or they don't want to understand.
Well, look at it this way, Joe. For the last year, shareholders and a lot of these constituents, these aren't like, yahoos in the middle of the country live in log cabins. These are shareholders too. They've listened to Dick Fold and Aaron Callan tell them everything was okay at Lehman Brothers. They listened to John Thain say, we don't need to raise capital. Yeah. They listened to Bob Steele, talk about how everything is peachy keen over at Wachovia. I'm probably missing a couple others. And, and look what happened. You know what I'm saying? I can tell you as someone who's covered AIG from the beginning, you don't know how many fights I had with the PR people at AIG when they were writing stuff down and I said Martin Sullivan's job is in jeopardy. I know it. And they came to me and says, you're full of you know what? You are wrong. Everything is fine. I mean, I could tell you that people don't trust Wall Street for these reasons because I'm not saying they're lying, but they're clearly spinning heavily, right?
We've gotten some emails that even point back to the Blodgett era. Trust us on these stocks, trust us on this mortgage. You're going to be able to pay.
And then behind the scenes, they're saying this is a piece of crap or something. That was one of his emails. But that's the problem. Wall Street does not have the trust of the public, and combine that with the fact that you had a lousy sales job, and combine that with the fact that by Hank Paulson and Bernanke, and combine that with the fact that I'll tell you, listen, when you're dealing with I'm not saying that the Republican House members are lunatics, but they are ideologues. The people that voted against this are clearly ideologues in a sense, and that's not so bad. I'm not saying there's anything wrong with that, but they are. And you had them in your corner, kind of. They were ready to deal, and then Nancy Pelosi gave that speech. And listen, that shouldn't cause them to do what they did. You don't roll the dice with the country's future based on hurt feelings. But, you got to think that speech was, I'll tell you, I sat there and listened to it, and I said, this is the worst thing we need now. Because, listen, Carl, from the minute I broke the story 2 weeks ago, I knew Republican support for this thing was marginal. Right. And I also knew that Hank Paulson was dealing primarily with Barney Frank. And, Barney Frank is very pragmatic.
Well, you raised a good point, Charlie, on leadership, and that's something that Becky is going to introduce our next guest on.
Okay.
In 1 second.
Listen up on this, Charlie. Our next guest actually says that he sees a glaring lack of leadership when it comes to fixing what's been going on Wall Street. He's somebody who should know. He's been around both Wall Street and Washington for quite a while. Joining us on the phone right now is Boone Pickens of BP Capital. And Boone, tell us what you think happened yesterday, what should have happened and what went wrong.
They've already said it. It's a lack of leadership. We don't have any leadership, and the American people don't understand, and so consequently they're pressing on their representatives to be careful, don't do anything, and so they want to be reelected. The whole thing is is a mess. But you know what's going to happen, Becky? I mean, just look at this closely. Realize where we are. We're all focused on it, but you've got another one coming up, and that'll be energy. I don't know exactly whether it reaches this level of heat, but it's coming up because we can't continue to do what we're doing on energy.
Although energy has probably fallen by the wayside. They've got a much bigger and a more immediate problems that they're focusing on right now, Boone.
Okay, you say that, but what's the number on this problem? 700 billion?
Well, 700 billion is the number they're looking for the fix. Hard to say exactly what the number would be if they don't get it. Where do you think things go if they don't get it?
Just a second. 700 billion. Okay. Well, look at what you're paying for foreign oil annually, not one time. 700 billion. Isn't it interesting? Both numbers. That's a coincidence. Probably so. But here, I think they're doing everything they can. You got Paulson is. He's in there with bullets going past his head all over the place. I think he's very smart to call Warren Buffett. Buffett's in Omaha. Nobody's shooting at him. And so Paulson calls, says, this is what it looks like. Warren sitting there pretty cool and works with him on the deal. I think that's very smart on the part of Paulson, and Buffett's very good to come in and help out on it. So here you've got the American people don't understand. You've got everybody trying to get reelected and all. I think they've got to come together on the deal. That's all there is to it. It's got to happen, and I think it will. I think it'll happen on Thursday.
You think it'll happen Thursday? You think a plan very similar to what was voted down yesterday will go ahead and pass later this week?
I think so. I think they got to get the FDIC into it, and I think that'll happen too.
If that doesn't happen, Boone, what do you think it means for the markets and the broader economy?
Oh, I think you're headed down. One of my partners said last week, if they don't do it, it's a 2,000-point drop. I said, oh, my God. I said, you're kidding. And he said, no, I think that's what will happen. So then after we had a 4-hour meeting yesterday after the market closed and all, it was, we're all starting to focus on him because he may be right. I don't know. I still don't think it's that severe, but 777 and at one pop there is that's pretty sobering. So I think they're going to do it on Thursday.
Again,
but
though,
it's a shame that the way we react here is we have to, you have to have the train wreck. Just two of them going head on at each other 60 miles an hour.
Well, we
never step in and throw the switch. Okay, excuse me.
No, Boone, I was just going to say, I mean, you're right about just how difficult it is to explain all this. We keep getting bankers sending us charts of LIBOR today, which is off the charts. There's no way to make that digestible to people who shouldn't be expected to understand that. So as a leader, how do you get that message across without looking condescending or without talking over people's heads?
Well, you don't need the speech you got yesterday. I think we had it at that point, and that just gave people an opportunity to say, "Oh no, I'm not going to do it." But when they're right on the fence, the last thing you want to do is to do something to cause them to go to the wrong side of the fence. So,
what about the president? What can he say? He's going to be speaking in about half an hour, not even that much time. I mean, does he have the juice still to make votes happen?
No. I'm afraid not, but it's right there. You know, it's right there in Washington. It's right there in the House, and they need to come together on it. They're going to do it. Listen, I'm an old geologist that has faith in Americans when it gets down to it. So they'll come to the table and they'll make a deal. It has to be made on Thursday. I don't want to think about another huge drop. Hey, wait a minute, I'm getting too old for this. So. I've been kicked around pretty good on this one. So.
Yeah, you know, Boone, we watched oil prices fall by $10.50 yesterday. You just called yourself an old geologist. Did that catch you by surprise?
No, you could have told me anything fell $10 yesterday, and I wouldn't have been surprised. I was prepared that if they didn't pass that, it was gonna come down. But you know, the oil, we're still right around 100, and that I said that the OPEC would support it at 100. I'm not sure they're not supporting it right now. All they have to do is just pinch back a little bit, and but there isn't any reason.
You got to tell me this.
There's not any reason for them to take $60 oil. So I mean, people talking about how it's going to come down to 60, they don't understand how the people that have the oil work. They're not going to give it to you at 60.
You know, Boone, you made some comments to the Wall Street Journal last week. You said that this has been your toughest run in 10 years. The fund's lost about $1 billion, $270 million. Was that?
It's more than that now.
It's more than that now, based on yesterday's move?
Yep, we're down more.
What are you still positioned on the long on a lot of these trades?
Well, we're not the longs that we have on oil, for instance. Those are three ways that we sold a $80 call on some of them, bought a $65 call, and paid for it with a $56 put. So those are they're in the money, and you're not going to leave them. But as the market goes down, you're going to make margin calls. So those are not. I'm not concerned about those. The equities are the ones that we've taken a real hit on the equities.
You mean the energy-backed equities?
Yes. Yeah, I'm talking about our stocks.
Right.
And those are, and I know what those companies are worth. I seriously know what they're worth, and now they're being evaluated at about $75 oil and $6.50 gas. So I just, I feel comfortable. Do I feel comfortable? No, I feel like all my fingers are mashed in the door right now. I'm trying to get somebody to open the door for me. And but at the same time, I'm not afraid of the equities that we're holding. I think we've analyzed them well. We understand them. We know where we, what to expect. But we don't like what we have. Sure, I wish I'd have gotten out 6 months ago.
What about equities overall, Boone? Reasonably valued at this point? I mean, given the fact we don't know what's going to happen on the Hill?
Keep me over in the energy, because I honestly don't follow. If you ask me, IBM or GE or something like that, I have no idea on those. I don't follow them. I know where the values are on the equities we have, and I know that we know what we're doing. We just need some more time and a little support on this thing, and get everything back going again.
How crazy does it get at the end of the month, at the end of the quarter? Does that tend to add to a lot of chaos?
Well, we have a 90-day notice on ours, and we have right now we have been notified by about 15% of our people that they want the option now to withdraw their funds by the end of the year. So if we can recover in the fourth quarter, I imagine they would think about that and maybe not do it. But it's about 15%. The end of the quarter, we never have a square up on a quarter. We just we're fundamentalists, and we look at it how it looks to us every day, and we look at it 10 times a day. And it's just quarter we go through the end of the quarter, we don't square up on anything. We don't try to make a quarter look good or take losses against some gains that we've had or something else. I don't know. That's way maybe we're kind of simple guys, and so that's where we are. And I don't like where I am, I can tell you that.
Yeah, I wouldn't call you a simple guy, Boone, but we appreciate your time today, and we'll hope you come back real soon. Talk to us more about what's been going on.
Okay, well, we'll hope that Warren and Hank get this thing squared away here, and somebody finally understands what they're saying. But they didn't. The American people don't understand is a problem. But let me have one more minute on this one. I want to go back to my subject. That when we get to the energy issue, and we're going to get to it pretty quick as soon as this is cleared up. But when you get to the energy issue, Washington doesn't fully understand it, and they can't explain it to the American people. The American people, I think I'm doing a good job of explaining energy to the American people, because we're getting tremendous support back to our website. We're now over 7 million people have come back to that website. So they want to know, and we're going to know, and everything's going to work out for us. This is, we do have leadership. Sometimes it doesn't look like it, but it'll show up. So, all right.
All right, Boone, thank you very much. Appreciate talking to you, and we'll talk to you again soon, okay?
Okay, good deal. Thanks.
All right, Boone Pickens.
Bill in Kentucky writes, we do understand LIBOR out here. My wife was in LIBOR for 12 hours. So
That's pretty good. If you're just waking up, futures are pointing to a higher open, but we should point out LIBOR is hitting records. The lending shutdown among banks continues. And of course, we still got a lot more to come. The president is going to make some pre-opening bell comments on the bailout plan. That's expected at 8:45 a.m. Eastern Time. Right after the break, though, former National Economic Council Director Larry Lindsey will be our special guest. What does Larry think needs to be done to get this bailout through Congress? We're going to find out after a short break. Don't go away.
We're going to hear from President Bush in less than a half hour. There's the futures right now. They've been up as much as indicating 300 points higher now, indicating somewhere around 230 points higher. I think 8:45 is when we will hear from the president. By the way, that if we did go up 250, 300, I thought we were going to close less than 500.
Yeah, it looked like that.
At 2 till 4. We were down 460 or 470.
Someone wrote in, why did they let the market keep trading after the close?
Yeah,
It just took a while to finish things up and settle on the end.
So now I guess we've decided with everyone we've spoken to that we're rebounding on prospects for doing this on Thursday.
Yes.
It's not that we're coming to grips with not doing it at all.
Correct.
Okay. So let's go with that. Our next guest says that Congress needs to address this crisis of confidence right now. Joining us this morning, Larry Lindsey, former National Economic Council Director, President and CEO of the Lindsey Group. You've been saying for a while, welcome, Larry, good to see you, but you've been saying for a while, do some stuff with FDIC. There's some people that are now holding that up as an alternative. You think we need to do both the rescue plan and do some stuff with FDIC?
Yes, I do. The rescue plan that went down yesterday was very important for cleaning up the asset side of the bank's balance sheet. They got a lot of bad assets there, and basically what the plan will do is move those assets to the government. We got to do that. We also have to worry about the liability side. That's the deposits. You know, the story was in the paper today about what caused Wachovia to have to be resolved. It was outflows. Same thing was true with WAMU earlier in the week. The basis of any financial crisis is you got to find a safe place where people can keep their money. And we used to think it was the bank. Folks are coming to doubt that, and we've got to reassure them. You can put your money in the bank and it'll be safe. And if we do that, then we can stabilize both sides of the bank's balance sheet, and that's going to be a big step forward.
Really? We still have people on that are pretty smart. We just had two of the best in the business on saying, what we need to do is just that the banks need capital. They don't need this other stuff. They need capital. The government should buy preferred stock in some of the banks and give them capital.
Joe, I've got no problem with that. I mean, after we get this, the balance sheet stabilized, yes, the banks need capital. There are a number of ways to do it. We're also going to have to find a way to stabilize home prices, because I don't think by itself just recapitalizing the banks will do that. So I think there are a number of other steps that are going to be needed. But right now, on Thursday, we need to clean up both the bank assets and protect the liabilities, protect the depositors, so that they can keep their money in the bank and know it'll be safe.
So where do we get the votes, Larry? From the Democrats? Do we put something in for them, or do we put something in for the Republicans?
You know, I blessedly don't have to make decisions like that, but my instincts would tell me that, you move left, you're going to lose votes on the right. You move right, you lose votes on the left. I think the best thing to do is essentially keep that package intact, but give people some reassurance that the bill is going to have extra chances of working because the macro environment's going to be improving. You're going to stabilize the liability side of the balance sheet. But more important, if you put in FDIC insurance, you're finally telling folks on Main Street, we're doing something for them.
Right.
We're letting the small business person protect their payroll so their payroll checks won't bounce. The guy who's about to buy a house and needs a down payment, he's going to have more than $100,000 in his bank account that day. Regular, ordinary folks carrying on transactions need to know their money is safe in the bank.
Yeah.
It's as simple as that.
Both McCain and Obama, Larry, are out this morning calling for the guarantee to go from 100,000 to 250. Is that high enough?
Well, why would we limit it at 250? Again, if you think about what people need, it doesn't take a very big business to have that kind of payroll every 2 weeks. It doesn't take a very big house purchase to need a number bigger than that in order to make the check clear. You need working capital. You guys down there at NBC Universal, right? I mean, that's a big company. You don't want your paychecks to bounce either. Why are we telling anybody at all, that their money isn't safe in the bank? Let's tell everybody. Let's keep it simple, guys. Let's forget the computer models. Tell everybody, look, you put your money in a deposit account in a bank or in a money market mutual fund, and it's going to be safe. That seems like a very common sense place to start if what you're really trying to do is build confidence in the economy.
Yeah, this morning we compared it to creating a 10-block perimeter. If you're the cops and you're trying to catch a bad guy, build a fire break far on the outside, and then we can start to work on the inside.
Exactly. You don't build a firewall when the flames are touching it. You build it far away before the flames get there. Absolutely. And I think actually there's a chance this will happen. I know you had Chris Shays on, great congressman from Connecticut. Roscoe Bartlett has proposed one to take the limits off completely. I think there's a lot of movement in this direction. I think once you tell Main Street, yes, you hear them. We know you're worried about your bank account. We're going to do this for you, too. That it will change the dynamics of the situation.
Larry, does it need congressional approval? I mean, all these bills that are out there, can the FDIC do it without them?
No, you need congressional approval to raise the cap on the FDIC limit. It has to happen.
Larry, you've been working for Republicans a long time. We already know about if you're way out there on the right and you're a fiscal conservative, you're already mad at the Bush administration. So now you're saying do this, then do some of the stuff with the preferred stock to recapitalize, and then do this. I mean, did you ever think that the Republican Party would be advocating so much government and so much spending?
Well, I'm glad you asked that question.
You are?
One of the lessons that we should all learn from this, and just watching what happened yesterday and indeed in the last few weeks, government really hasn't looked too good either. So all these calls for more regulation and bigger government, we got to realize there's such a thing as government failure as well as market failure. What we have to be is pragmatic. Right now we have a crisis. We got to get through the crisis. We got to clean up the assets in the bank's balance sheet. We got to clean up the liability side. We've got a lot of these problems were caused by government regulation. One of your guests earlier on said the one thing you're not going to see now is a market bottom because you're not going to have a short selling rally because there's no short selling. Well, those are the kinds of mistakes government made with unintended consequences. the original plan to protect the money market funds that Secretary Paulson put in a week ago Thursday. That caused a run on the banks.
Well, increasing house ownership, back in the late 90s, trying to build, ownership in housing and saying we need one more little thing called a subprime to really get things cranking.
You know that New York Times article from '99 about Fannie Mae?
About
it's been lighting up.
Franklin
people have been emailing it back and forth. The trader just sent it to me. The date on that article of 1999, September 30. Today.
Wow, that's classic.
99.
Well, I got to plead guilty. When I was on the Fed board in the mid 90s, I helped write the Community Reinvestment Act regs that helped contribute to this. Look, government's not perfect. We got to face that fact. And the argument that some are making, what we need is more regulation, I really don't think holds up, and I don't think the people believe it. I do think we need to help Main Street here. Main Street is the one that feels it's being neglected, both by the guys on Wall Street and by the guys here in Pennsylvania Avenue. And that's the kinds of changes we need. And I think deposit insurance is at least a step in their direction to know that we understand their problems and not just Wall Street's problems.
Okay, Larry. Thank you very much.
My
Good
pleasure.
to see you. Thanks for joining us this morning, Larry Lindsay.
All right, we have much more coming this morning on Squawk Box. We've got the president. He's going to be making some comments. We also have Senator Orrin Hatch weighing in on this bailout plan. We'll be right back.
He has one of the most brilliant minds on Wall Street, and his kind of thinking is worth millions. See what Jim Cramer can do for you. Mad Money with Jim Cramer, CNBC tonight. They took their idea from obscurity to nationwide sensation. Ordinary people doing extraordinary things.
Give me a sign. I'm either supposed to do this or I'm not.
Making a business venture a business adventure.
If the next guy can do it, I can do it, and I can do it better.
Donnie Deutsch hosts The Entrepreneurs. Premieres tomorrow, CNBC 10 Eastern.
The most accurate free real-time quotes on the web or mobile, CNBC.com.
Welcome back to Squawk Box. Rick Santelli here. Well, overnight, everybody's talking LIBOR once again. U.S. LIBOR jumped huge to 6 7/8. And all maturities, whether you're looking at overnight all the way out to 1 year, they're all firmer today. But keep in mind, that shouldn't be a surprise. We do see that interest rates today in the treasuries have moderated in terms of not as much buying. Hey, we're now hoping rates go up a bit. The dollar is very strong, and now we all wait. Maybe the equity markets aren't the main battlefield, but many can relate, especially after yesterday's huge price drop. Carl, back to you.
You got that right, Rick. Thank you for that. We are waiting for the president to make a statement on the economic rescue plan. Coming up in about 12 minutes, 8:45 Eastern time. Also in the next half hour, Steve Forbes is going to be calling in, and Senator Orrin Hatch. He's on the Finance Committee. We'll find out what he thinks of the, I almost said bailout plan, the rescue plan, when Squawk Box comes right back. Don't go away.
The Bond Report is sponsored by PIMCO, the authority on bond.
President is going to speak in just a couple of minutes about the bailout plan from those two mics. I'm trying to see, can't see what any of the actual books are back there. Can you tell, Carl, what any of those?
It's hard to tell. No.
Maybe Steve Forbes knows. On the phone right now, Steve Forbes, CEO of Forbes, Anna McCain supporter. We got to do this, Steve, on Thursday for sure. Is that just really, really necessary? We got to do it.
Well, you can see the markets are telling you we have to do it.
Okay.
It is absolutely essential. The system has frozen up. It's the equivalent of cardiac arrest. And while they argue about the brand of the defibrillator, the fact is we got to apply it. It's not just the stock market. As you know, it's the credit markets that are frozen up. Banks aren't making loans. What lending is taking place are companies drawing down lines of credit for fear they'll be cut off. And you're going to start to see it affect the economy. The economy is in recession now. Europe's in recession. Fourth quarter is going to be very, very rough. Asia's slowing down, and the credit system is frozen up. We need this, and this is just the start.
Tell me how, knowing it is where you come from on most things, tell me how you can possibly say that this isn't the Republicans' fault, considering it's the president's bill with Paulson, and you needed the House Republicans. The Democrats delivered almost 2/3. How can you tell me that it's not the Republicans' fault, Steve?
Actually, it's everyone's fault. The Democrats, if they were serious about passing it, they lost 90 of their own members. Nancy Pelosi, if she was serious about getting this thing through, would not have made that inflammatory opening remark yesterday. Her key people, her own lieutenants, everyone saw were voting against the bill, which was a signal they weren't serious about it.
Who voted against it?
some of her key lieutenants.
I read that on some mail. I also read that some of Barney Frank's, some guys on the 12 guys on the Financial Services Committee or something, Democrats. Why would they vote no? Because they figured they had it done and they could go back to their constituents?
Who knows? But it showed that they weren't serious about getting this darn thing through. So there's blame for everybody. The Bush administration, to be blunt about it, has done a very, very poor job of explaining to the American people the magnitude of this crisis. Hank Paulson, certainly among House Republicans, has been about as effective a diplomat as an angry drill sergeant talking to raw recruits. So they botched it on the selling side, botched it with the American people. But the fact of the matter is, especially when you saw what happened yesterday, what you see with LIBOR today, and what you saw almost 2 weeks ago before this plan was originally put out there, the system is seizing up. And if you don't do something about cardiac arrest, all the rest isn't going to matter.
All right. Steve, appreciate it. We need to talk to you frequently if you're near a phone, so we'll be back in touch. These are amazing times, but we'll be in touch. Hopefully you'll answer the phone.
Terrific. Thank you, Joe.
Okay, see you later. We got a great picture of him there, too.
That is a good picture.
It's a really good picture.
Take a look at futures. Steve was just talking about what LIBOR's done. A lot of hesitancy among banks to part with their money. Some of the yields in the short end really showing a flight to safety today, even though futures have been hanging in there well above fair value. We'll see what happens when the opening bell rings in a little less than an hour's time. Also coming up next, Finance Committee member Senator Orrin Hatch will give us his take on the rescue plan, on the events that led to its failure to pass in the House. And we are still waiting for the president to make a statement on that economic plan, expected in just a couple of minutes. We'll have that for you live when Squawk Box continues.
Tonight, America's automakers in crisis.
There's 1 million people counting on Chrysler being successful. Failure is not an option.
Can Robert Nardelli steer Chrysler in the right direction? Plus, Ironman director Jon Favreau and producer Stephen Bochco on the next Conversations with Michael Eisner, CNBC Tonight. They took their idea from obscurity to nationwide sensation. Ordinary people doing extraordinary things.
Give me a sign. I'm either supposed to do this or I'm not.
Making a business venture a business adventure.
If the next guy can do it, I can do it, and I can do it better.
Donnie Deutsch hosts The Entrepreneurs. Premieres tomorrow, CNBC 10 Eastern.
There's a live shot of the podium. We are waiting for the president to make a statement on the economic rescue plan, expected in just a couple of minutes. We will bring that to you live when he steps in front of the podium. In the meantime, with his reaction to the events on the Hill this week, Senator Orrin Hatch, member of the Finance Committee, joins us from Washington. Senator, good morning to you.
Hi, how are you?
Good. We expect, there's been some talk after some proposals by Senators Obama and McCain this morning that the president may announce or propose some expansion of FDIC insurance. Do you think that's likely?
Yeah, I think it's very likely, and I think FDIC has handled itself pretty well. FDIC is already in the play and doing a pretty good job. In fact, both the Fed and the FDIC are working very diligently on these problems, as well as Treasury.
Obviously, the news all week has been about the House, but in the Senate, at least you guys aren't at the center of attention this week, right?
That's wonderful. I think I think the Senate is prepared to vote on this, but I actually think they could sweeten this deal a little bit and get the House members to go. And nobody likes this bill. Nobody wants to really vote for it, but most of us realize that we've got to stabilize these markets and do some things that are really financially secure.
I know under parliamentary rules, the lower house typically votes first. But could the Senate go first this time?
Well, we could under a certain approach that I recommended to the leader yesterday, our leader yesterday. But usually money bills have to, under the Constitution, originate in the House. But we do have some tax bills over here that we could amend and send back to the House. But to make a long story short, I think the House has got to come to grips with this. And I think they were prepared to do it yesterday. But, people are blaming the Republicans and saying, well, if they had the votes and they just backed off because of the partisan remarks that were made on the floor, I think that's bunk. The fact of the matter is that there were probably there were enough votes to put it over, but they were people who hated to vote for it, didn't want to vote for it, but had probably thought that they probably should. And then the partisan remarks came, and they just said, "Oh, the heck with it," And then I think, and that's what happens around here. These are sensitive things.
Here's the president right now.
Yesterday, the House of Representatives voted on a financial rescue plan that had been negotiated
by congressional leaders of both parties in my administration. Unfortunately, the measure was defeated by a narrow margin. I'm disappointed by the outcome, but I assure our citizens and citizens around the world that this is not the end of the legislative process. Producing legislation is complicated and it can be contentious. It matters little what a path a bill takes to become law. What matters is that we get a law. We're at a critical moment for our economy, and we need legislation that decisively addresses the troubled assets now clogging the financial system, helps lenders resume the flow of credit to consumers and businesses, and allows the American economy to get moving again. I recognize this is a difficult vote for members of Congress. Many of them don't like the fact that our economy has reached this point, and I understand that. But the reality is that we're in an urgent situation, and the consequences will grow worse each day if we do not act. The dramatic drop in the stock market that we saw yesterday will have a direct impact on the retirement accounts, pension funds, and personal savings of millions of our citizens. And if our nation continues on this course, the economic damage will be painful and lasting. I know many Americans are especially worried about the cost of the legislation. The bill the House considered yesterday commits up to $700 billion taxpayer dollars to purchase troubled assets from banks and other financial institutions. That, no question, is a large amount of money. We're also dealing with a large problem. But to put that in perspective, the drop in the stock market yesterday represented more than $1 trillion in losses. Furthermore, both the nonpartisan Congressional Budget Office and the Office of Management and Budget expect that the legislation considered would ultimately cost the taxpayer far less than the $700 billion, because the government would be purchasing troubled assets and selling them once the market recovers. It is likely that many of the assets would go up in value over time. Ultimately, we expect that much, if not all, of the tax dollars we invest will be paid back. As much as we might wish the situation were different, our country is not facing a choice between government action and the smooth functioning of the free market. We're facing a choice between action and the real prospect of economic hardship for millions of Americans, for the financial security of every American. Congress must act. My administration will continue to work closely with leaders of both parties on Capitol Hill. I appreciate their determined efforts. While Congress is out today for the Jewish holiday, my administration will be talking to congressional leaders today about how we can move legislation forward when members begin returning to the Capitol tomorrow. Our economy is depending on decisive action from the government. The sooner we address the problem, the sooner we can get back on the path of growth and job creation. This is what elected leaders owe the American people, and I'm confident we'll deliver. Thank you.
The President of the United States making his second appearance in as many days, asking for support for this rescue package, saying that the legislative process is not over. They're going to talk to congressional leaders later on today, and invoking, guys, the stock market's fall yesterday, which is what a lot of people were saying we needed to be very visible to create a sense of urgency in Washington. Senator Orrin Hatch of Utah is still with us. Are his words going to make any more difference today than they did yesterday, Senator?
I think they will, but I think they've got to mold this package a little bit differently. You know, if I had my way, I'd put some tax incentives in there. I would, you know, have a tax holiday for people who purchase these discounted houses and keep them. They wouldn't have to pay capital gains or even income taxes on any gain that they might get in the future. I bet you'd have a lot of these snapped up almost overnight. I'd have continue the 50% bonus depreciation. There are a lot of things that you can do that might just be sweeteners. If we basically kept capital gains low, if we reduced the corporate tax rate from 35% to 25%, you couldn't believe what that would do for our economy. But our friends on the other side just aren't willing to do that. They want more taxes. They want to be able to spend more. And when they talk about pay-go, in other words, pay-as-you-go, they never mean cutting back on programs. They just mean additional taxes.
Right.
And that's what really puts a real crimp in this. And they've been unwilling to even move in those directions, even though we know time-tested things like that really will work.
One last question before we go. Do you see a vote happening at the House by the end of the week?
Yes, I think we've got to stay here and do this till we get it done. I don't care how long it takes. I'm sorry that we're in the middle of a campaign, but we need to, as members of Congress, do our job and get this done. And I think most of my colleagues are willing to do so, and I hope that, and there's no excuse for us not getting this done before the end of this week.
Senator, thanks for your time. Good to talk to you this morning. Senator Orrin Hatch of Utah joins us from the Capitol.
All right, coming up, we've got the Trader's Edge with Art Cashin. And as we head to the break this morning, check out the futures. After a loss of 777 points yesterday, futures are well above fair value, about 200 points above fair value. Squawk Box will be right back. Biggest point loss we've ever seen for the Dow Jones Industrial Average yesterday, down 777 points. This morning, though, you're looking at those futures. Dow futures up by better than 200 points above fair value. Let's check in with Art Cashin. He's the director of floor operations at UBS Financial Services. Art, you see a reaction like this morning. What's it make you think?
Well, I think it's a reaction to a couple of things: the spike in the VIX, the very heavy oversold. So far, it's a reflex reaction. The reason I'm not more enthusiastic about it is I'm looking at the credit markets, and I think that's where everybody should be looking. For these days, the stock market, even though that's where I make my living, is the sideshow. The center ring in this circus is what's happening in the credit market. And this morning, credit rates are as tight as they've ever been. So I'm still a little worried there are more shoes to drop.
We had a couple people on earlier who were talking about the credit markets, the commercial paper markets. If things freeze up there, as they've been doing for the last week or so, what does that mean down the road to people at home?
Well, I think that's why we're going to see, if it stays like this, all that concern about bailing out Wall Street, it's really to try and free up Main Street. So the guy with the plumbing supply business who gets a contract can go to the bank and get some of the money he needs overnight, where the commercial paper markets free up and big blue chip companies rotate in and out of that market to give them day-by-day expenses. If that freezes up, we could see big names fail, and they won't be financials.
So why do we watch the futures? I know you said that this is the sideshow, but why are futures trading higher this morning? Is this thinking there's going to be something done in Congress? Is this putting that off?
The feel is that they think that when Congress sees the reaction to their inaction, they will get together and pass some form of the bill. Yesterday, Bernanke was worried enough that he poured $600 billion, nearly the $700 billion we're talking about, into the world financial system. This man is concerned, and his time frame, everybody says we have time. I think his time frame is minutes and hours. So if he's concerned, I'm concerned, and that's what I'm watching. The futures can dance for a little bit. Let's see if they hold it for the day.
Okay, Art, great to talk to you. Thank you. Again, Art Cashin.
All right, coming up, this morning's top headlines. There are many. Squawk's coming right back.
What are you doing with your money? Our investment experts and strategies help protect your money wherever it's invested. CNBC's Financial Crisis Task Force, weekdays.
Futures at this point getting, looking at about 200 points of snapback first thing in the, maybe at the open. And that was about what we lost in the last minute and a half of trading yesterday. So we'll see what happens. Oil keeps trading around almost down to unchanged, back up a little bit right now.
But as Art Cashin said, you got to watch the credit markets.
Got to watch
it.
LIBOR, new record versus the Fed funds. Yeah. We'll be back tomorrow, I think. Right?
Yeah, it's going to be interesting.
Keep our fingers crossed.
And a lot more to come. Of course, the coverage continues during the day. We'll see what happens on the Hill. Make sure you join us tomorrow. Squawk on the Street is coming up next.
This is CNBC.com News Now.